What you're about to see is a full course of over 5 hours long on a single concept, that is smart money traps. And if you watch this full video, I can guarantee you that you'll go from an unprofitable trader to a consistently profitable trader just off technicals alone. You'll see content that's exclusive to my mentorship students, one-to-one calls teaching beginners how smart money traps work, and real case studies like live trades, real chart proofs, just to back up the theory. I've always been a believer of giving out everything for free, but if you want to scale your trading even faster, don't hesitate in going to the description to work personally on a one-to-one basis with me. And with all that out of the way, let's get into the course. Smart money traps. You probably hear me talking about them a lot, and it's probably the most important and complex concept of the strategy. Now, why am I teaching you this on just the second week? Is because you really need this in order to get down with the strategy, as you've seen. But also, like, if you master this, you'll instantly be profitable. And I'm not even kidding. So, a little bit of backstory of the smart money traps. So, I don't know how long you've been in the game of trading, but smart money concepts and ICT have been super popularized. And once something becomes super popularized, it tends to become too basic. It's not because the initial strategy was basic. It's just that too many people start to do it, and too many people don't want to do the nitty gritty of actually mastering the strategy. So the actual level of the strategy will come down because people are taking it too basic. For example, the actual smart money concept strategy or ICT, it isn't so bad. The problem is just when people start to taking it too basic, and then it becomes overall just too basic because most of the people aren't willing to do the work. So my problem with smart money traders is that most of them think that markets will move like this. That there's literally people whose strategy is simply this: break a structure, place their order block, okay, and log it here. That ain't no strategy, boys. That is not no strategy. Because if market would have moved like this, we would all be billionaires, right? Because if markets move like this, oh, I just gotta buy here, okay, easy. But then once you go to the markets, it's a complete different story, right? It's not this. And it's what I told you, that markets move from one liquidity to another. So when I say that this took liquidity in order to move higher, it just means that here you have the same order block as before that people will place themselves on, and this is a smart money trap. And then on the second video, we'll go even further to explain why this was a trap. The other counterpart will become a trap. Okay? But just now you have to understand that whatever you would place yourself before, if you're trading SMC, ICT, you just have to be patient, take the hands off the laptop, and as soon as you see your entry that would have gotten stop loss, just enter afterwards. Okay? That's basically it. Most of the times when I draw this shit out, people think it's too complex, but it really isn't, boys. It's just a matter of waiting and really understanding what's happening. Because that's the whole point of my strategy, is viewing the markets with logic and actually understanding what is happening. Let's say you have something like this. Boom, not smart, break a structure, and then you have another one, and then you have the real one, a retest, and then price heads lower. Okay, my mouse kind of fucked, I'm sorry about that, but as you can see, you would probably place yourself here before, okay? Because you were seeing that here we had equal highs, we had the liquidity, You was waiting for it to get taken. You see how price gave you some little bit of rejection right here to trap the support resistance traders, because they will be trading this, right? Okay, they would place their order around here with the stops above, because this for them is a resistance. Price rejected from this level twice, and they would most likely target this. So boom, then they get stop lost. Once they get stop lost, okay, and once they get stop loss, the resistance also gets taken out. And once that happens, you know that smart money traders are going to be looking to take this. First, to take out the support resistance traders. Then we also got to wait for the smart money traders to get out. So they will see the run of liquidity, right? Because they are also seeing the liquidities sometimes. And then they will see a breaker structure. Now, the first breaker structure is always going to be a fake one. Always. Sometimes it may work. All right. It doesn't happen all the time. The best case scenario is to always wait for a smart money trap, because in that case you're gonna have a higher win rate and higher chances of making it. Because you're also gonna be profiting from the smart money cycle, smart money trap cycle. But that will go into over part two. In this case, I just wanted to show you guys how as soon as we make a breaker structure, we'll do another sweep of liquidity. Okay? Always think always think about, you have your liquidity, right? Once we run it, always wait for two sweeps. Two sweeps of that liquidity. I want you to sit patiently, wait for whenever you would place yourself here, instead of taking the position, just wait. And as soon as you see it get stop lost, then you can look to enter. Because you wait patiently for the position that you had taken before. If you're trading ICT or SSMC, you wait for a double sweep, or you wait for a fake breaker structure and then a real one. But this is the common pattern. Okay, I know this could mean a lot of stuff in the market, but just look at some structure like M5 should look like this, bro. Sometimes it could go even further as M1, but just know that first one, fake one, second one is a real one. If you got any questions, don't hesitate in asking them in the call. Every single time I get in a call with some student or some guy from the free community, always asking about the same thing. It's smart money traps. It's a hard concept to master. Well, in the surface maybe, because then you just looking at this and it really isn't that hard. You just gotta wait for price to sweep the liquidity twice. And you gotta ask yourself, once price reaches your zone, has support and resistance traders been taken out? They have? Perfect. Has smart money traders been taken out? If not, then you don't place yourself, because you don't want to be trading with the same 95% of traders. All right? Because we know only 5-10% or even 3% of traders are winners. So you don't want to be placing yourself with the majority, because price will liquidate them in order for the smart money, in order for the actual smart money to place themselves to all the liquidity they have, and then profit from the move. Because this is all about taking liquidity, taking people out of trades. And this can mean stop loss, can mean break even, it can mean take profit. It just needs to be people out of trades in order for them to put their big sizes on the market. All right. So I hope this is clear. We can even do an example of buying if y'all need to. So for buying, it would look something like this. Just because I forgot, in here you would have your true order block. This was a fake one. This will be the true one after the true breaker structure. And then you could have a look to place yourself. Okay, right here. Or you can even place yourself on stop order after the real breaker structure, depending how big the stop loss is. And then you can go. Then the entry really depends on you, but I've got videos on that, and you guys seen it. It's not that complex. I would prefer you guys just to understand where the liquidities are, and really just place yourself in the trade, because precision is good, but yeah, sometimes it's just I would just prefer for you guys to get the direction right and get the bias and everything in the liquidity. You already be better off. Then we can always look to refine, of course. And so, same order block. Uh, fuck. The same liquidity to the downside. Okay. The fake breaker structure after breaking liquidity. The smart money trap right here. Okay. And then once everybody's been taken out, you got the real breaker structure, and you can place yourself right here. Okay. Does this look clear? We're gonna go over it on the call, but I want you guys to really go deep into this, and you can go watch all my videos. I know it's a lot, but bro, if you really want to make it, you can watch all my videos on YouTube. Doesn't matter if, because it's free. There's also major value in there. All right, y'all know I'm all about giving free sauce, and there's a lot of sauce on the YouTube, and I'm always talking about smart money traps. Always, always, always going into it, because it's a part of my strategy, super important, and it's always happen. And if you master these boys, you'll be instantly profitable, no doubt about it. Another thing I would like to add is sometimes on the high time frames, like how would you know it's gonna become a smart money trap? Well, is the low that you're seeing as a zone, such as this, as the low taking liquidity, as this taking liquidity, somewhere around here? Well, just to this draw, no. So if it hasn't taken liquidity, I'm not trusting it. I'm not trusting it. I'm expecting price to do something like this. Because now this low has taken liquidity, has taken the liquidity from the previous low. Okay? You just, if you trade SMC, you don't need to forget everything and unlearn to then learn this. You just have to get have the same knowledge, take to the same knowledge you had about smart money trading, take a step back and realize where you would place yourself and just not trade it there. Okay? So if you were looking at the zone back in the day, you just wait for it to get taken, and then you would look to place yourself. The reason most traders like is their downfall here is because of smart money trap cycle that we're gonna go over in the next video. But they'll see this and they'll think we're no longer bullish, we're bearish now because we make a breaker structure because we broke this low, this protected low. It was never protected because it never took liquidity, but that's their downfall. But they're always right all along. We just said they got in too early. They got in on a shitty zone, on a trap, and now they're liquidated from the market, and they'll soon be liquidated on us on the opposite sense, because they'll try to short it afterwards, where they should just be long it. Okay. And another thing I would like to add: if it's too basic, if it looks too good to be true, it is probably a trap. And I mean that with these zones. Okay. If they look too good, if they look too simple, if price just did this and it's the only structure you got, and there's no little, and there's no, say, liquidity here to search. Okay, imagine there was this between this move, and there was some imbalance here, and price could maybe take out this liquidity to go to the zone and then move up. Then I would say that you're looking at stuff, yeah. And imagining this also took liquidity right here. Imagining, I know this looks awful, guys. Sorry about that. But also imagining this took liquidity. Because now it's looking like something. Because we're taking liquidity, okay, protective low, place a zone, your order block, okay, price is going up, there's another liquidity right here with some imbalance in between the liquidity and the order block, and we take them, retest it and go. Because these are valid because people are also taking order blocks aggressively. Because I know the smart money traders will be looking at these zones, and these are smart money traps. Okay, this is what I mean. What if it looks too basic? If it's just the first order block after a structure up, like why would you take it? This took no liquidity. It's too basic. It's the first one, and yeah, this is how price moves, guys. And we're only going off theory because it's simpler for you guys to understand. But I can jump on the markets and show you 1,000 examples of this. I'm not out here just simply showing you draws. I'm all about practice, guys. But I'm just bringing you the theory because it's way simpler for you guys to understand. And because you guys paid. Because I wouldn't be doing those fucking draws. I would be directly in the markets giving you the sauce. On YouTube, it's a bit more complex. But in here, I might have some beginners and I really need to get them on the right foot. And in order for us to really master the smart money traps, I also got to go from beginner to advanced. But you guys are gonna become killers, bro. I'm telling you this. If you're overwhelmed by this, don't worry. 1 hour in a call, we can get this over done with. Like, I'm certain about that. And so, sometimes it would also look too good to be true. Like I was saying, we have imagine we run a liquidity, we do a major sweep of liquidity, beautiful candle right here, beautiful rejection candle. Just imagine some M15 candle with a massive wick to the upside, just signifying a major sweep of liquidity right here on this level, and it looks perfect. If it looks too good to be true, it is probably a trap. Okay? And you also gotta ask yourself, well, if we took liquidity right here, we took out the spot resistance traders. But if this looks too good to be true, and we haven't taken the smart money traders yet, then what's gonna happen? It's exactly this. And that's a perfect example on one of the trades I took a while back, just 2 weeks ago, I think, or 1 week even. It was this one, I think, if I'm not mistaken, the sixth. In the sixth, yeah, because here, okay, with an M15, you might not see it yet, but if I go even lower, you'll see that people were seeing this accumulation, this manipulation after this week, and it would drop back down immediately. Now we have this liquidity right here, and because the body didn't close above, it just means a massive selling pressure as rejection, and so beautiful to shorts to look for this liquidity, to look for the lows, or for a massive move down. And it was a trap. It was a trap because it simply was too good to be true. And also because smart money traders weren't taken out yet. Okay? So you always got to ask yourself that. Has everybody been taken out of the trade? If they haven't, then it's probably a trap. Okay? In this case, you don't have much structure to go here for, but price has done this massive rejection. It is dropping. There's people that just trade after news because they want to catch a retracement, okay? Because price went massively up after news, and people know that price can't go up forever. You got to retrace. So people trying to take advantage of this move, selling right here, and seeing how price is dropping, then they're having their order blocks, their order block right here, on this wick or on this zone, and you have price retesting it, and then you have it dropping a bit lower, giving some rejection. And what's gonna happen is we're gonna take them out. And it's what I was saying, because here, after this massive run up of liquidity, of this accumulation, of this block, here in the black line, you know that every support resistance traders that was trading inside of this got taken out. Then you know that here, all the smart money traders that were taking this order block after news, they got taken out. Support resistance traders out, smart money traders out. You place yourself, because everybody has been taken out of the trade. And you could look to place yourself on the stop order or on the inducement of this, on the sweep of the inducement right here. Okay, with some imbalance, and you also have the order block right here, so you also can take that. Okay, price beautifully tagged it. It isn't magic, it's just how it works. Okay, price retested it beautifully, and then you can look to short against the next liquidity, which is this one, because price moves from one liquidity to another. Even though our bias is still bullish for the long term, okay, for these next few weeks, because I want to see some higher time frame liquidity get taken, we can still have these retracement moves against a trend that can be more than enough to be a win. This rejection, 65 pips, that's more than enough for a win. And here you could have gotten 4 hour, maybe even a 5, or the 3 was for certain, because this was a trap. This will become a trap too, because smart money traders will be changing their bias after this. They were right all along. They were trying to short here, but then they see price continue to go up. Well, maybe we're not bearish, maybe we're still bullish, and we're not. Okay? Because they will not understand this. Because why would price sweep liquidity twice? They're asking themselves. Well, they don't understand that they themselves are also liquidity. Okay? They think they're trading with the smart money, and they're the only ones seeing liquidity, but they don't actually trade liquidity. We trade liquidity. Because we know there's a bunch of smart money traders nowadays, there's a bunch of ICT traders, and they all trade like this. Run of liquidity, place my little order block, and target it the opposite direction. And once they get taken out of the market, that's what I look to enter. That's what I look to position myself, because I know they're out. I can show you more traps. For example, here, this aggressive order block. Why would you have an order block right here? What did this do? I would prefer for price to take this out. It didn't, but it took this one. Because I know people would be looking to place themselves right here. It's a zone that this low made the push higher. And so people will be looking to place this. And they have trend line above, which is valid, but it's just too soon. It's just too soon. And you can see how price comes to the order block, gives them a reaction. All right, this reaction makes a fake breaker structure right here. You see how this wick breaks this one, and then boom, massive rundown with a sell in order to buy, and then you can have your move. And then price is retesting the zone that actually took liquidity, and then it's going up. But this zone doesn't mean shit, because this is probably going to be a trap for later. Perhaps. Or maybe we can just take this. The whole point is to adapt. We don't need to know for sure, but we do need to adapt. Okay? So I just want you to wait for liquidity getting taken. And if you at least see a smart money trap, you can at least get yourself to break even or even some profits or even some TP because you got the smart money trap cycle, which we'll go over in the next video. But you can see how this can be easily become a trap, Price already tested this order block right here, and so there's no point for it to come again unless there's some lower time frame imbalance over here, but I don't really think so. I think this is going to become a trap and we're going to run. There's a lot of probabilities in here. We can do this and this. We can do this and this. We can do this and this, or we can actually go down and do this. There's a lot of probabilities, boys. The whole point isn't to know for sure, because I'm not going to be trading the move that's going to be taking these liquidities, but I'm going to trade the move that's after taking one of these liquidities. Okay? I want you boys to know that. And I want y'all to do an exercise that you're going to receive where you're going to have to spot smart money trap. Okay? In here, perfect case. Price went up to test this, but like this is no longer valid per se. And as soon as you break structures to the downside, people are seeing these equal lows. They're placing the order blocks around here, but there's no smart money trap here. There's no smart money trap, and price takes them. Okay, still going to the upside. This smart money trap. This took liquidity. All right, it became valid on this block. We made efficiency right here. Efficiency, same as saying this zone was a big ass block, and price retested it. Because here, it made a move up. This low made a push higher, and it just looks so simple. Become a trap. And then it took liquidity out, and then made another move out. Then it became valid. And this move took liquidity out, then made a huge breaker structure on the higher side to be visible for everybody because we're on M30, all right? Sweep of liquidity, breaker structure, and then boom, trap. Because there's still liquidity higher to take, right? This red line. But just wait when it becomes too visible for everybody to see. And don't worry, because on the call we'll be discussing everything about smart money traps. It's essentially the same, but I know like sometimes I gotta repeat myself and phrase it in other ways for you guys to understand. But that's not talking the shit about y'all. That's just like, I know it's hard. Like, it isn't simple, but as soon as you master this, like, you guys are gonna be good, because you can literally just get profits out of the smart money trap cycle and not even know the actual bias. Because sometimes you don't even need to know the direction of the market. If you just read liquidity and know where the liquidity is and where the traps are, you can still get some profits, and then price run the opposite direction, telling you were wrong, but you executed well and you got out of the trade with some profits. Meaning, I'm telling you guys, like trading a retracement, for example, a counter trend trade, but you still can get some profits because you understand the markets, because you understand the traps, the liquidity, and you can still get some profits even though you didn't get the correct bias. Okay? And here it doesn't mean I didn't get the correct bias. I knew we were still gonna go higher, because even though we took out this liquidity, there's this major one more important that was just above. But I know we had to do a smart money trap cycle, and that's the point for the next video. So, the smart money trap cycle. Remember when I said that smart money traders are initially right on their bias, but they usually get fucked because they change it up once they see a double breaker structure, a double sweep, which for us to means that just they got on the smart money trap, and then once price runs them, they completely change their bias, which just tells me how dumb they are. Because how do you switch your bias like that after you just sweep a major liquidity that you was waiting for so long? We sweep it, and now you're looking for another thing. or maybe it's just other traders that are trading more aggressively, that trade from order block to order block, from their old strategy of, oh, I see a breaker structure right here, I place myself. Okay, didn't work. I see a change of character again, I place my order block, it didn't work. And that's the whole point of the smart trap cycle. It's because we took because there was a smart trap right here and we took it, okay, there is going to be smart traders who are going to say, oh, we weren't actually bullish, we're actually bearish. So because this took liquidity, let me place myself here. Because it took liquidity, is valid, we're bearish. Okay, let me short it here. And then they get fucked. And once they get out on the longs and out on the shorts, that's where we can place ourselves. But even better, I was telling you guys about how you can profit from the smart money trap cycles to actually get some wins. Sometimes you get price incentivize them to come in to trade this order block before we actually even made the real breaker structure on a higher time frame. But you can get a small little breaker structure right here, okay? Let's say there's some structure right here, and you can place yourself on a lower time frame, okay? And because you know the shorts will be a trap right here, you can easily take advantage of the move. Let's say you place yourself right here, you can get a 3R just from the smart money trap cycle. Not even the move you were intended to, which could give you like a 5 or 10. Massive. This is the type of results you get once you master liquidity. But you can see how you could at least get a 3 just by understanding the smart money trap cycle. Just because you know this will become a trap and people will get taken out here, you're pretty sure that most of the times, okay, don't be sure, and then you're emotional about it because it didn't happen. Okay, we just gotta adapt. But sometimes you're confident enough, okay, confident that this will get taken because this will become a trap. And let's say you have a bigger of a stop loss, I don't know, here. Now, the breakout structure won't be OTP, it will be like 1.3R, but it's a good enough confluence for you to put your stops to break even now. Okay, because you know, okay, there's low probability I get a stop loss. Okay, now I get the price that runs this breakout structure. I can put myself break even with stops break even. And now, even if price wants to tell me I'm completely wrong and shut back down, that's all cool because I'm already with stops at break even. Because I read liquidity enough well in order that if I'm wrong, even if I'm wrong, I can still get out of the trade risk free. Because I read price well. Because I knew this structure will become a trap. And because of that, I saved myself. I saved myself from losing or actually gained some profits. Because sometimes when the smart money trap cycle is big enough, you can get trades like I've done that you can just take advantage of the smart money trap cycle. And this is on lower time frame, but you always gonna see trades that will tell you on the larger scale, on a higher time frame. Because let's say here, for example, you know that here we talked about in the last video, we had a smart money trap right here inside of this block. Okay, we have a trap right here on the lower side, but also because this was a trap, this would become a trap. Okay, you always got to think like this because once one side was a trap, the other will become a trap because price will never move like this. Okay, so once you take liquidity above, look for something under. Once you take liquidity under, look for something above. It's always the same story, guys. All right, here, because this was a trap, this will become a trap. Okay, because I don't know. This become a trap because this will become a trap. This will become a trap because I'm pretty sure this will run it. In higher time frames, it's kind of complicated, but in here, because this become a trap, this will become a trap. And traders are looking at this. The smart money traders are looking at this. You cannot tell me that price was out here, made a breaker structure. Now every single smart money trader is going to be looking at this beautiful zone that made these huge rejections to the downside, and they wait for the retracement to come back, for price to come back, and then give them out this move. No, price is just going to take them out. It's not that simple. It's not as simple as that. Okay? And you can see we have some bullish momentum, and then boom, shoots back down, and then fake breaker structure, real breaker structure. I hope you can get through the drawings, but fake one, real one. Okay? Here, sweep of liquidity, fake breaker structure to the upside, another sweep of liquidity, and then you have the real one. Always wait for two sweeps. Always wait for a smart money trap to be formed. As soon as you take liquidity, relax. Watch the price go your way, go the way you intend. But really, the smart money trap, like understanding smart money traps, is not just about a technical view. Sometimes it can get complex between the time frames, and you don't know this structure count because it's too low, or is it too visible? And smart money traders are thinking this. We're going to be looking at that uh, more in the future, but just know at least 5 minutes time frame can be good for you. And I wouldn't recommend you to be looking at M1 as well. Minimum M3, M5 should be good for you. It isn't about just the technical side of seeing a run of liquidity and seeing a breaker structure for you and watching another sweep and then actually place yourself. It's about resisting the fact that price just run your liquidity that you were expecting and it's now moving your way. And you're now asking yourself, like, will we make a smart money trap? Because I was waiting for this liquidity all this time and price is just going up. And now I don't want to miss out on this. And even though we didn't make a smart money trap, like I waited all this time for this liquidity to get swept, and now it has, like, price is going my way. It can happen that price just takes out the liquidity and then moves away. If if the smart money has gathered enough liquidity from that liquidity sweep, they don't need to make an extra smart money trap. Price can just move on. The thing is, most of the times when this happens and you're tempted to jump in, and we haven't made the smart money trap yet, the hard thing is to resist this. And what you'll see is that boom, take this. Because maybe we took out in London, and then London continues back up, and then New York, boom, just comes and takes this whole shit out, and then price actually goes up, and you can trade it here and actually get a win. That's what I see most of the times. Because sometimes I have my liquidity, price sweeps it, and then goes higher, and I tell the guys, boys, I had this liquidity, I was seeing it, price started to go up without me, it didn't make a smart money trap, so I'm just following the plan. It didn't happen. It is what it is. And then what you know, New York comes in and actually gives me the setup. Or it doesn't have to be New York. It's just an example, but like, just happens for price to actually drop and then give the smart money trap, and then I can place myself, and then I can get a win. Okay. And like I was saying, because one side was a trap, the other will also become. So in here we have made the example. There's examples everywhere, boys. There's examples everywhere. In here, this was a trap. All right, sweep it right here, and because this was a trap, this become a trap, and because this was a trap, this will become a trap. Okay. In here, because this was a trap, this will become a trap. Okay, I think because this high, okay, was the order block. Okay, this high made this push to break structure lower, and then when price comes back and takes it, now everybody's gonna looking at the low. They actually made a push to break the high, to break the trap, and so once it takes them, they will be looking to place their order blocks right here, and they'll get a small little bit of reaction, just as they do always, to trap even more people, and then they will get tagged out again. Okay. As soon as you take a trap on one side, you look for the other. Okay, this is how you implement it, because here we took out liquidity, and as you know, because this was a trap. Okay, this didn't become a trap instantly, but it kind of did in here if you trade it aggressively. But yeah, you know that price would come here because this was a trap. You know that this will become a trap, and you could have traded it, all right, and at least get yourself a win here. Or if you're having a higher stop loss, a bigger stop loss, you could at least know that price was at least going to break these levels on this trap to at least be safe and risk free with stop set break even, because you would have been 1 hour up as soon as you take this liquidity, and you're sure we're gonna take this because this was a trap. This will become a trap, okay, and then you get to win because on a higher time frame it's the same story. Okay, just remember that. Always ask yourself: are smart money traders been out? Are support resistance traders been out? As soon as everybody's out, I want to trade. I want to place myself. And remember, ask yourself, because this was a trap, this will become a trap. Always place yourself the order blocks on both sides, because this one was because we had a trap on the longs, we're gonna have a trap on the shorts. Because we had a trap on the shorts, we're gonna have a trap on the longs. It's always about that, because for some reason they changed their bias immediately, which shows how stupid they are, respectfully, but they are. And so, don't worry, brother, because on the call we're gonna be detailing everything out. Any questions that you might have, and if anything, go watch my videos, because smart money traps, always talking about them, always in my trades. And we're gonna go over this and make sure you become an expert in seeing them, because once you master the liquidities and then with smart money traps, it really is the most advanced concept, and we only on week 2, brother, and you're gonna become a monster. I can promise you that. That's not me telling you a dream, that's just me being realistic, because in 2 weeks you're already better and with more knowledge than I was with 2-3 years, right? So yeah, guys, I'm gonna give you the homework. Try to do the homework, and we're gonna be reviewing it in the call. How to trade smart money traps and the basic fundamental of it. So most of the times I'll have my zone of liquidity that I want to see get taken, and then once price takes it, most of the people will be saying, "Yo, we're at your zone. We look for shorts because price is dropping." You just wait, because everybody's seeing this. Because most of the times, this liquidity sweep means a liquidity sweep for people that have their stops above a certain high that has this liquidity, or it's just a support resistance. Okay, in this case, a resistance. So we just took out people that trade support and resistance on most cases, or maybe even SMC traders on the higher time frames. But as soon as we sweep this and we give out a beautiful reaction, meaning a rejection from this level, and we break lower, meaning a fake breaker structure, you just wait, because everybody is going to be placing themselves around here. Okay, this was made to take out support resistance traders, and this will be made to take out the SMC traders. And so once the support resistance traders, this SMC traders are out, that's where you place yourself. After everybody's been taken out, that's where you place yourself. And then, as we liquidate them, you wait for a structure lower. You wait for. It looks even better if we had price doing this, and boom, because this high break lower or something like this, not an equal low, but something like this. You have some structure down here. No need to take the first one. It's valid, but no need to, because then price can go easily from one liquid to another and go to yours one, because then it becomes too visible. But you can just take advantage of the smart money trap cycle, because this was a trap, this will become a trap. The reason that is because smart money traders will get trapped here on the shorts, and because they will be liquidated from it, they'll think, oh, we're not actually bearish, we're actually still bullish. So instead of trying to short again, let me long at this level, because this long took liquidity that made this impulse that break this. Yeah, and then boom, they get fucked on the shorts, they get fucked on the longs, and you position yourself after the smart money trap, where we do where we have gathered some liquidity from this sweep, from this sweep, and because this was a trap, this will become a trap, and just that movement, not even the big one from the major liquidity sweep, just from this block alone, from these two traps, you can get yourself a win. In most cases, it's either a win or you can get yourself tagged out break even and protect yourself, because this level will break. And that's how you trade a smart money trap and smart money traps as a whole. You just have to wait. Once we see the liquidity, you just have to wait. Once you see some rejection, you just have to wait. Once you see price is coming down and you don't know if it's gonna do another trap, just wait. It's better to just wait, because once you see this, you have a way more likelihood of succeeding in your trade. And yeah, boys. Any further questions about it, you can ask me, but this is the basic of it. You just have to wait for a second sweep. It isn't that hard. It seems complex, but it really isn't. So I sent out in the Discord this. Alright? The trap I'm expecting. And this has been swept. Alright, this trap has been swept, but this still hasn't, right? Still needs to. The thing is that now this looks like a perfect smart money trap. The reason is because it is a perfect smart money concept trade or setup. Because you have something that took a resistance right here, okay? Price swept the resistance. It gave you structure lower, okay? And it left you a support and is coming back to test the order block. So in essence, it's a high that took liquidity that made a support and is coming back to test the order block, which is perfect. Like this, these two confluences without the support is already good for them, to the point where you have something that took liquidity, break a structure, boom, they place themselves right here. That's the basic smart money trap that we always taking. But when you have this one with the support, nah, that's a good one. That's a good one. And if you notice, I'm having an issue with my indicator. I don't know why, but this midnight 30 New York sharp timing, it's not in New York session. So New York session, they might come take it out. And right now, because it's on even higher time frames than just this, it looks even better. Right now, I mean, this is way more visible. Okay? And I usually say, if it looks too good to be true, it probably is. And that's super true in the smart money concepts world. Because if you have your liquidity get taken, price goes lower, you have support underneath, and price is coming back to test of course everybody's going to be looking to short it here, and price is already giving a reaction. Does that mean I'm wrong? No, probably means I'm even more right, because it's just calling way more people in, telling way more people to get in. But then again, it can also work. Okay, it can also work. You can also do this, continue, or continue to have back. Many things can happen. You can also have this, and then we take out this. Okay, because then it will be super good. But yeah, man, just want to let y'all know that for the smart money traders, I think that trade liquidity, they see a sweep of support or resistance, and they trade in the first block. You all know that because we trade smart money traps, we are for a second sweep. All right. In these, in this, we take out the support resistance traders. As soon as we do this, we take out the smart money traders. Yeah. And when they have this alongside with a target that has an equal low or equal high, then it's just it's pretty uh, much like a class setup for them. Because back in the day, it used to be for me. So I'm using that logic in my favor. Hope you guys took value out of this, and see you on the live markets, boys. Now, the London close session is the session that's after New York, all right, in the late afternoon of local London time. Okay, so you have the London session, as you can see by the blocks. This block is the New York trip timing, which is considered as well as the lunch. New York, and then after New York local morning, you have what I call the London close, which you can see there's not a square on it, but you can see the kill zone that's right here in this red pink tone. Okay, I don't need to wait for a smart money trap on the major liquidity sweep if we're on London close. The reason for it is that because we're already on London close, we're already at the end of the day, price doesn't have much time to move and much volatility. Okay, so price will just take out the liquidity, has enough, and then it just moves. And when it moves nice and easy. So I don't want to be waiting for a trap once the market's already closing and there's no really time to make a trap, because sometimes they do take some time, and so price would just move. Like in here, it kind of did a trap. It swept it once and then it swept it twice, but here was still like middle of London close, I'd say, at 6 p.m. UTC plus one. But if I find you an example, there's plenty of trades of mine that I took where you see I'm not waiting for a smart money trap once we sweep it on London close. Here is perfect. Like the sweep was perfectly made in the start of London close session. She's like four. This is wrong. It's not at start at 4 p.m. It starts at like 4:45. Okay, we sweep this previous daily low, and we don't do a trap. We just continue to trace. After it has failed, yes, but we only look for retracement of the day. So that's a good example. In here, this is a good example as well. London close sweep after sweeping this London low. It didn't do no trap. It just swept it and then it ran the direction. Okay. Uh, in here, it swept the previous daily high along with this equal high on New York trap timing. It swept it and then it made the retracement during London close without making a trap. Uh, in here, in here is perfect because you have the major liquidity being sweep. Okay, this is a liquidity on high time frame, and price was climbing up, climbing up, climbing up, and as soon as it takes it during London close, very late during the day, and then it goes down from there. If this was in a prime New York timing, then there would be a trap for sure here. But because it was London close, boom, just takes it and then goes the other way. So remember this. if once we take out liquidity in my strategy, we always wait for a smart money trap, unless we're in London close session. If we're in London close session, then I'll disregard that because price might not have time to actually make the smart money trap. Today we'll be looking at sessions and when to trade them. So we got London, we got New York, and we got London close, if you want to consider as another session. So you got these three. Before London, we got Frankfurt, which will not touch, all right, because it's just building liquidity for London to take, or it's doing the inducement all day, but it can also be a fake one. It's too risky, and the volume is not going to be as much. So avoid Frankfurt. Between London and New York, we're going to have what's called the New York trap timing. All right. I basically explained this in one of the videos in the first module. But yeah, this is just to remind you all that there's an hour between the end of London morning and before New York morning. That's called the New York trap timing cycle. The New York trap timing, not even a cycle, it's just New York trap timing session. And it's basically going to liquidate highs of London. Then you think it can be protected, or it's going to start to head lower to tell you that we're bearish, and then New York comes and liquidates all of it. And it's just building traps. Either it's taking out liquidity from London, or it's building liquidity for New York to take. So just avoid trading in New York trap timing. In UTC plus one, that would be from 12 to 13. Right, this is the hours I'm used to. Make the calculation and put it to yourself. So the DXY is the dollar index. If we're trading USD, is the euro value against the dollar value. Meaning the DXY will be anti-correlated to USD. They'll move perfectly, but anti-correlated. All right? And it's DXY that's going to move the USD pair. The impact on the dollar, it's huge on USD compared to the actual euro currency. Okay, so you do want to be looking at the XY as the movements will be inversed and you have liquidities at the same spot, like you can see here. Okay, if I zoom in, you can see that this inducement on USD that we saw corresponds to this inducement on the XY. Okay, and you know that this liquidity that's red corresponds to this liquidity that's in the XY. This corresponds to the high up there. This corresponds to this, but you can also say there's an inefficiency right here that corresponds to this that I marked out. And I also marked out the order block as a blue line, as we might get a reaction from it as soon as we take this black line in the XY. And you could also think that order block line is this. All right, that's right here above the inducement. Remember, the inducement must have some imbalance between the high or low of the inducement and the order block. Okay, so mark out the liquidities on USD and the XY and wait for both to get taken. This is important because, as I said, the XY is what's going to move the dollar. So if there's something that's against us in our bias for USD on the XY, we want to avoid the trade. Meaning, if in the XY there's a big gap on the upside, I don't want to be looking for longs in USD because the DXY might go up to fill in that gap. And if DXY goes up, USD goes down. Okay? So this is why you got to have your bias to USD, but you all got to remember that DXY is what's going to move USD. And you got to think to not be against DXY. Okay? So this is an extra confluence for your trade to play out. Okay, because here you have the same liquidity is getting broken, but if you have one liquidity in USD getting broken, but the XY still hasn't taken the same liquidity or the liquidity as next to it, or if there's a major liquidity against to it as well, then you don't take the trade, because you know the XY will most likely keep on moving towards that liquidity. And if it keeps on moving towards that liquidity, that means you're probably going to get stopped out. I hope this isn't becoming too complex. Sorry, but I'm just trying to give you as much sauce as possible. I hope you appreciate that. So, smart money traps. On Forex, you already know. Let me put this as FX and futures. Right, so we have 3 sessions that we trade. I'm just going to move this over real quick. We have London, New York, and London close, right? So how does this work on FX? In FX, we wait for a trap in London. We wait for a trap when we trade in London, New York. And for London close, you already know the market is mostly dying and it's going to be a retracement of the day, and the market doesn't have that much time to do it. So we don't wait for a smart money trap because the price has already been trapping all day, most likely. Right, so this is how we do it on FX. Now with futures, the interesting thing that I found is that you wait for a trap on London, right? Same as Forex. In New York, it's kind of both. It's kind of both, and I'll show you in a sec. But sometimes you can have market open, like I was saying, go search for liquidity, and immediately reverse from those levels. And so in Forex, you have the liquidity sweep, but then you would have to wait for another sweep on the lower time frames in order to trap everyone that was seeing that liquidity sweep to then just short it, in a sense, if price went higher. But on New York, you can have the trap, meaning you can have some news at 2:30 UTC plus 1, like some normal timing of news in New York, as you know. And then an hour later is when the actual New York market opens. So you can have the news sweeping the liquidity, head lower, and then as soon as market opens, it sweeps it again. So then you have your smart money trap, because although market opened right here, the New York session was already open right here. We swept the liquidity once, we swept the liquidity twice, as it did open up violently in New York, and the market open, sorry, and then you got your short. So this could happen. What it can also happen is just market opening, taking the liquidity, and then reverse, right? This is why I say you can have both. And then a London close, curious thing, is also the opposite. So yeah, you can have situations where you don't have a smart money trap on New York, but you'll have it on London close, which is interesting to know. But yeah, this is why this makes me the most profitable session on futures. And why? Also because of New York, on the market open, obviously, because it's just I've just been finding so much profitability on it, and it's seeming way easier than Forex, actually, just because of this point, where it just market opens, comes to take a liquidity, you look for the reverse move, where there's another liquidity, right? Because you know the market is all about cause and effect. It will search the cost, which is a liquidity, and then to deliver the effect, which is the fuel from that liquidity, possibly to search for another liquidity, right? You have liquidity on the high side, you have liquidity on the lower side. You just look for market to take one and have fuel to take another one.
I still don't understand it, but I know at least what I don't understand.
About the smart money traps?
Yeah, and also like the efficiencies. I watched the video a couple of times, but
Okay.
it's the same problem with like the order blocks and the SMTs, because I don't know which exact candles I should look at, because in the videos you always like just said, okay, mark this one here and here, but I don't like understand how to identify what I have to mark, because you
Oh,
gave it a
okay.
simple explanation, but I can't see it exactly on the charts. I know.
If you think it's
Yeah.
like a single M5 candle, or if it's a whole structure, per
I
se.
can send you because I had two types. I did my homework twice because the first time when I looked at the correction, I was just like, oh shit, what the fuck, goddamn, this is crazy. But I thought I had the photo saved, but I didn't. I have the new one done.
Okay, okay, okay.
This is how it looks like.
Uh,
Wait,
but
wait.
before we jump onto it,
Yeah, yeah,
like as
yeah.
far as videos and all the concepts, like
Yeah, the concepts, I understand it. I also understand where to look for the liquidity, where the ranges are, but
yeah,
it's exactly, I don't know. Like, I would have to show you a picture of what I first, like, I did, instead of making the order block like it should be, I sometimes made it too big, took too much inside, because I
okay,
just
okay.
didn't know where to fully,
Oh, okay, okay, okay.
yeah,
I
yeah.
got you. I got you. I got you. I got you. So like yes, the order block if you like change the time frame, you could refine the order block and it could be bigger as well. Like
Yeah.
when you the efficiency is the same thing. Like efficiency might just be a daily or weekly order block
Hmm.
because it has that structure, and when you uh, increase the time frame, that same structure will be a candle, and that candle will most likely be a order block.
Okay. So like, wait, for example, if I now look at this here, would this be one? This,
Exactly. Yeah.
okay, but like, okay, wait.
The order block, the most simple way to put it,
Okay, yeah.
is like it's the green candle before a move down. The last green candle before a move down.
So
In
here
your
it
in
would
your
be this one.
example, last blue, yeah. It-
Ah,
that's the simplest way to put it. Or the last uh, bearish candle before a move up.
like I
Look
have
here,
the
look here.
drawing here, like I have my notes. I know
Yeah,
what
yeah, yeah, yeah.
what to
It's
look
just that
for.
inside of those big structures, you
Hmm.
might have small little structures,
Yeah,
and
yeah.
then you're
The internal
refining the
movement, yeah.
efficiency, like you refine the order blocks.
I think this is exactly my biggest problem, because everything else I understand it. I understand what to look for,
Really,
but this is the thing that kept me up for years because I just couldn't understand it.
just like the way of refining it, or
I don't know, it just didn't work in my head. I wasn't able to understand it. I don't know how to explain it, but just I couldn't comprehend it. I don't know why,
okay, okay,
but I
okay,
I was trying so hard. It kept like getting worse and worse.
okay,
But
okay, okay.
yeah,
Yeah,
I
no,
kind of
no,
lost
no, no.
myself.
We're gonna fix that immediately. But you can see like this as the high of an efficiency, right?
Hmm.
If you're looking to buy
Yeah.
this, I don't have may decrease the time frame, and you can see it even better, right? High, and then made the high. Right now, if price comes back to it, but kind of not really respects it in the sense that it doesn't bounce from it and continues to go down,
Okay.
it might still be valid. The overall zone might still be valid because the zone is big, but instead of taking in consideration this one, you might take in consideration this efficiency
Yeah.
because it's more refined. It's more inside of the zone.
Hmm.
It's still within this zone, right?
Yeah, they're pretty
It's
close. Yeah.
way more refined. Or maybe this one is already been tested though.
Mm.
Right here,
Yeah.
it already came to it. But yeah, it's just a matter of refining it a little bit like that. The initial ones obviously are the best, but sometimes if price doesn't respect them at once, you may take the refined ones just to see if it's a good zone. Like
Yeah.
here, the the really good one would be here or here for this structure.
I
But I
see.
was
Yes.
also taking in consideration worst case scenario like here if it bounces off of it,
Mm.
because if I also because this is some structure, and if I go to h4, it may be order block, as you can see
Yeah. I
the
see.
last red candle before the massive jump up. And you can also consider this first green candle.
Hmm.
You can consider the first or the last two
Okay.
at It depends, but order blocks aren't really an important subject per se,
Yeah,
because most of the time, I think I told you, but I would much rather see a order block fail than an order block to work.
yeah, it's better to get the liquidity and then.
Yeah, as you can see, none of these order blocks that are like a high time frame uh, initial worked, right? They all got swept in here.
Mm,
And this is an order block, this is an order block, but they all intermediate as well. So they like to fail. They will get into it, deliver a small little reaction, as they always did, but then they kind of sweeping it. And then you have this efficiency right here, this structure, but you can also have this one right here, which is the more initial one,
yep.
which if you can also go to daily or weekly, yeah, daily, it would be just an order block. The last bullish candle before this move down.
I see. Yeah.
Does that make sense?
Yep. It kind of hit me like, yeah, that's simpler than I thought.
Yeah. I it's just that like I wouldn't look too much at order blocks and efficiencies in lower time frames. But the thing is that like I've shown you here, these reactions, like it will always give reactions, but it's just on the
Yeah.
lower time frames it isn't that enough. But on higher time frames, it might give a reaction to trap people, but that reaction on the higher time frames is big enough for you in a day to get a win. So even if you're not correct on the whole bias, meaning if goes here, for example, it doesn't go all the way back down, it goes a bit down to where you can probably get a win. You can see here in my chart how is uh, sweeping this major liquidity, right?
Yeah.
Now possibly going towards this one. As it does so, is coming to efficiencies, and even this one is better, right? You can see this structure.
Yeah.
High, comes higher, comes back to it, like your drawers. Then comes higher, comes back to it. Then boom, yeah, and then you can consider these more internal highs. This, of
Mm,
course, the whole structure is like this, but inside of it you have these small structures,
yeah.
and perhaps you can take these efficiencies if price would have kept dropping lower.
Shit, I always kept overcomplicating this.
Yeah, yeah, yeah,
It
yeah,
seems so funny
yeah, yeah,
how
yeah, yeah.
how easy this
No,
is.
no, I used to have the same issue. Like
Yeah.
you're overcomplicating stuff, and it's just making things a lot worse. You know. So something that I've been doing throughout the years is making my strategy more simple and more simple,
Mm.
and that's just been working as well.
Yeah, you said it a couple of times that it's just the best approach to it.
Yeah, because then it's not confusing as well. Because then it's not there's no like, is there a trade here? Is no maybe. Is there a yes or no? And you
Yeah,
execute,
yeah.
right? Anything else regarding the videos, concepts,
No,
the smart money traps?
everything else was okay. Um, exactly, this was pretty much the only problem. You can see, I sent you the homework there.
Did you mark
Mhm.
out this one?
Yeah, that was before I knew what I knew like approximately from
Yeah,
watching your videos, but I did not exactly know what to mark.
yeah,
So
yeah.
they're
So
all
this,
like approximate.
yeah. So what you marked here was an order block, correct?
Yeah.
But then it got tested in here
Uh-huh, yeah. Okay.
because it was higher and then come to test it and then it went higher. So
Mm-hmm.
right now the order block
Okay.
it's here.
Mm-hmm. Okay.
It's
Because that's the newer one and
the
it
last
already hit
the
the
last
other one.
yeah the last candle or the last move down before it went up.
Okay, yeah, I see.
And this is also a correct order block,
Mm-hmm.
but it's the intermediate ones. So these are super likely to fail.
Yeah,
The
yeah.
ones that are
Yeah, they're too close.
best are the ones that take liquidity and are initial, like
Hmm.
they're initial into the move. This then took no liquidity. It's in the middle of
Yeah.
nowhere. You can see how it's like taps it, goes a bit up, and then just traps it.
Hmm.
And this correct, correct. It's just
Yeah.
that it's the same thing that happened here.
It already got, yeah.
It tests this tests the order block, and then
Hmm.
this becomes the next order block.
Ah, okay. I see.
Because it's all a matter of testing. Because if the order block has already been tested, then like you can forget about it. Uh, this one, good order block, good SMT, and good mark of the order block. Because uh, if you go by the candles, it would be this,
Hmm.
but this would be too refined.
Yeah.
But then, yeah, if you up the time frame, this will be a whole structure. This is the whole order block. And then you missed out this one though.
Which one? Ah, okay.
This one. So you remember like the smart money trap cycle from the
Yep.
video. So it's
Two
like
sweeps, yeah.
this was a trap. So the level above will become a trap, right?
Hmm.
And
Yeah. Second sweep.
this you can kind of consider as a trap, even though it works.
Hmm.
It didn't later, but yeah,
Yeah.
this yeah intermediate order block, clear trap, but not really no really need to notify it. I mean, you can notify it because you know this will be a trap soon. You know that this low will fail soon, right? But just out of precaution, you can have this order block working sometimes. Sometimes they work. They can't always fail. So you might be shorting here, for example, and you might have a TP here, and you know
Yeah.
this level will be a trap. And in case this order block ends up working, you know that at least you're already out with a TP.
Hmm. I see.
Uh, then this, yeah, clear trap, and also becomes previously high, just going based off the structure as well. So you pretty much know that, right? Just going from one structure to another. And this, yeah, it was the initial order block that made the move, but
Hmm.
then again, internal and will not work. It's good that you marked it as well. This one, super basic. No, like last red candle that made this huge move, and people will obviously try to buy it here. I don't know if that was your strategy.
No, no, the homework was to mark every single one. So I
No, no,
wasn't.
no. I
Oh,
mean,
what?
the strategy before during the mentorship, like your trading
Aha.
strategy,
Yes.
your trading SMC or ICD, like you would see this
Because
order block and
exactly
then
in
this
one of
big
your
move.
shorts, you said like, um, do you know when you just it comes to your stop loss, hits it barely, and turns around? And I was just like, shit, fuck, he's right. I'm doing. There's something not right here.
hmm
Yeah.
Yeah, 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 yeah. So then you can see as it also gives a reaction out of it, then
Hmm.
traps. Same here, small little reaction trap. Uh, this, yes, super internal. It fails right here. So there's no need to extend it. But
Like,
yeah,
do you say those are the ones where they like catch more people, or
the ones like this, yes.
yes, it's they just get like more people and like use the liquidity, right? Yeah, yeah,
Yeah,
exactly.
yeah,
Yeah.
yeah, yeah. Because you also can see how it completely melted, and
Hmm.
also by taking these equal highs. But I would say that because it's really simple because it's also the low that made this high, the high of the structure,
Hmm.
and it didn't take no liquidity, and it's just like super simple, super beautiful in a sense. There's just like order block and then like massive green candles to the upside,
Yeah.
and then like if I were to trade, especially if I'm trading with the order block, if I'm considering one, I don't on the lower time frames at least. I don't want to be having an order block price running like super away from it and coming all the way back down just to do
Yeah.
this. Like most of the times that these people are expecting this, most likely just fail.
Yeah, we
Like
did.
if it were to work, it would make this break a structure and perhaps come back immediately and then like go, but
Mm. Okay, yeah,
like this, nah.
that's a good point.
And then maybe you can consider this one as well. But
Hmm.
overall, it's good. Overall, it's good.
So, which ones are valid? This one, valid.
Yeah.
Trap. This one
Yeah.
is valid. This is our internal one, trap. This one is valid. No, no, it's not valid. It got taken out, so it's not valid.
It's valid for the moment, let's say,
Shit.
because
Okay,
it worked. But
I
but I
thought too far.
wouldn't. I'm a say this though. I wouldn't trust it though. I wouldn't trust
Yeah,
it.
because it's
Later you
like
can see
the
how it got
pullback.
taken.
Yeah.
But my reasoning behind it is because it's like the London high, and yes, it took liquidity from the previous day,
Mm.
but it's New York comes and it's
Ah,
likely to take it out.
but is this here also important, like this one?
That's just a small little structure inducement that will most likely get taken, and it got took, and then they flew from
Yeah,
that.
like
Yeah.
could I expect like liquidity here? So could this be like potentially where I could like look after and
Enter.
then
As far as futures go, yes. As far as futures go, yes,
that's good to know.
because it's more likely
S-
to work. Yeah.
And this one is I would say fuck. Let me cook. I would say it's a trap
Yeah.
because I know I would have taken this. I would have taken this. I just know. So that's why I have to do the exact opposite shit.
Yeah. I mean, just to simplify it, it's like a low that made the newest high of the structure. Didn't take no liquidity in between it. It took the little inducement that you marked out, but like
Yeah.
it isn't that significant.
Hmm. Okay. Now this one here, I would say valid.
Mm. I would
Is
say
it?
trap though.
Trap. Okay. But it got the liquidity here.
Yeah, but what, like, which time was price in there? Like, look at the time. Look at the
Ah,
box.
fuck the session. Yeah, you said it's
It's Asia
okay.
session,
Trap.
and
Yeah.
then you can see how it takes it a little bit, New
Mm.
York, and then just melts from there. What you say it was
This one is valid.
valid?
Ah,
No.
no, no, it's internal. Right, right. We had this. Shit. Smart money is in my head, not the trap.
No, it
Okay,
didn't.
and
It
this
didn't take
one,
no liquidity. It's also like
yeah,
just coming back to it, like doing the whole like move a lot higher to then move the wall back down. And something interesting that you can see is that like once it takes it, it does like a double
yeah,
sweep. So it's
yeah.
like the whole block is a smart money trap, and inside of that, there's
There's
another
a
smart
smart.
money trap. If you go like to the 5 minutes, to the M3, to the
Yeah.
M1, right? That's the
What
curious
are
thing.
these?
So you wait for a smart range up on a larger scale. I say larger scale because it's not like high time frame. I mean like M15, M30, and then you look towards another
Yeah.
time frame after that sweep, which is kind of smaller.
Okay, I see.
And then the one you're supposed to do, yeah,
I would
no,
say it took liquidity, but it's still like internal, right? So I would say trap.
yeah,
Okay.
yeah. But I mean, you can see it on the futures price section, on the like price section that it just
Ah, yeah.
disrespected, you know.
Yeah.
But
Makes
yeah,
sense. Yeah.
that the whole structure to the left, I would just like it to be swept. And as you can see, it got swept.
Mm.
The Thursday low, if you can see by the
Thursday low.
boxes,
Yeah, this
yeah,
one
the
here, right?
Thursday low, it sweeps it to the right on Monday, and then it
Yeah.
goes all the way back up. That's the best. And
I see. Yeah, I
you can
see.
also do it because like the Asia high that was a trap
Yeah. This one.
up there because that was a trap. You can guess the low
Yeah,
is
is
going to be
also
a
a trap.
trap, and because that low was a trap,
This one is
the
also a
one
trap.
above it will be a trap.
Okay.
Exactly, bro. And it's also kind of like equal high with
Yeah,
all
yeah.
the structure, and it also becomes the previously high, which is another structure.
Okay.
The efficiency on high time frame, it's cool to go like simple and normal, But on the lower time frames like this, just look to have like some messy structure, just like
Yeah, yeah,
lows taking highs, and then taking the lows, and then taking the highs. Thing, just the overall range, right?
yeah,
I can maybe send you a video that I might have for that, but yeah,
yeah.
just
I understand the principles of internal and external movement. Like I know what you mean. Like one 15-minute candle is three 5-minute candles, and they move like different. Yeah.
no. I
Or
mean, I,
or
I
did I
mean the
miss the
overall
move?
structure. Whether you're considering some order block to be valid or not,
Aha! Oh my God.
or if it's a trap, or if you should trade it, just look at the overall structure to do something crazy, and not like
Yeah.
the normal stuff, right? Just
Yeah. Now
like
I understand.
instead
I
of going
understand.
something like this, just look for something like this, you
Yeah,
know,
yeah. I
and
saw
every
it in
single.
one of your shorts, but I don't know which video that was.
I will send you a loom, a quick loom that I.
Alright, that's nice. Okay. I'll post some pictures then so you can tell me what I'm doing wrong
Yeah,
or what I'm doing
exactly,
right.
exactly.
Yeah.
And it's good.
But
Start building confidence.
yeah.
Start preparing yourself
Yeah.
for that big 50K.
Yeah, that's we gotta do that. We gotta do that.
You gotta do it.
For the inducement part, right? I have a question like, how do you find it? Like, is it like those long weeks? Like suddenly there's a long week, right?
The
That
inducements.
yeah.
The inducements you find them. They're just there. It's like secondary highs. Okay, it's like this is an inducement, for example, from this
Mm-hmm.
low to from this high, sorry, to this low, from this structure. This you can say is an inducement, or even this, because it's just a matter of they are just secondary highs, secondary lows that have not taken any liquidity. You might have a, let's imagine this high swept some liquidity,
Okay.
and right now it has given a breaker structure. So we sweep liquidity here, we break structure here, and you have what am I doing? You have an order block here
Mm-hmm.
that's valid. You have some imbalance in between this, and you have an inducement here. Because this high took liquidity, this high
Mm-hmm.
didn't take no liquidity.
Okay. I get it. Okay.
So then if price comes back, I used to have an entry, uh, and I have a video on that on the course modules, uh, that it might be on week 3 perhaps, that it's different ways to enter the market. And then you have, I used to do this one because price would have just sweep this and then reverse automatically. You can have a sniper trade with that. You can place yourself on an order block, and you can have something even better. But then, like most of the times, you would just tag in the FEG, for example. You know how
Yeah.
people place their trades on FEG
Mm-hmm.
or imbalance?
Yep.
It's basically that, because what makes a FEG is like being between a high or an order block and inducement,
Mm,
because this didn't come to tag the order block.
okay.
So it's what makes some imbalance be here in between these.
Okay.
And
Got it.
it's also following the structure that I usually explain, how price moves like this. You know, let's say if we're bullish, we're
Mm-hmm.
always taking inducements, right? We also going higher, smart money trap. Oh, induced. You try to buy here. Here we go up. We trap people that's kind of longing aggressive on this order block. It is
Mm-hmm.
inducement because this low didn't take no liquidity. It didn't came to mitigate the initial order block. Nothing. And you try to buy here.
Okay.
Is it a bit clearer now, or
Yeah, yeah, yeah.
you know
So
there's oh whoa whoa whoa. No, but there's multiple, you know, like just imagine if you were to took this order block. You were
uh-huh.
to take this order block right here. You're waiting for price to come to take it. You know
Okay.
that you have a range right here, and this is the inducement of the structure.
Mm-hmm. Yeah, yeah, yeah. How about
Uh,
the one on the left? There's
the
one more
one
week.
on the left.
That's how you draw the inducement, right? Okay. There's one more on the left.
Yeah, this
Yeah.
one.
Uh-huh.
Yeah, you can consider it as well. And
Okay.
even if you want to be more refined, you go for this one. And there was even like a super reaction from it, because you have the order block, you have the imbalance, and you have the inducement that didn't come to take the 5 minute order block.
So just
So that's
above
the
the order block.
inducement.
Yeah.
Yeah. Because this inducement, imbalance, order block.
Okay.
And yeah, in here, price going up. Then it's taking inducement going up. In here, it's even better. It takes inducement, it goes up. Guys, it's just highs and lows that didn't do nothing. In
Nothing.
here,
Yeah. Okay.
if you're considering this high valid and this is your order flow because you want to short, then price is coming up. It's taking this inducement right here, which didn't make nothing. And you can even, if you go on aggressive, you can even consider this because of the candles, but we didn't take it. It's better this one because it has more candles and it's a bit more visible. But yeah, you can see how price went up, went down. He made some structure. This structure didn't do nothing, so then he got taken out. And right now, this structure took out liquidity, so it's valid as well, and then made price go lower.
Okay. Okay. But for the time frame wise, like do I look at 15 minutes
You have
or
inducements all over. You have inducements
yeah.
all over, like you see here on this example. I was talking about this one. This is just the candle. You know, you can see how the candles went down and up, but then
Mm-hmm.
this one didn't get fully tagged in. But there's whatever, it depends on what the structure is looking, what the price is doing, you know. But you can have inducements all over, higher time frame ones, lower time frame ones.
Yeah.
uh the It really depends, bro. Really depends. But it's gonna always be the same thing. It's gonna be something that, like, you have a significant lower high, and
Mm-hmm.
then you're gonna have like a mini structure that didn't do nothing, that didn't take no liquidity, and it didn't test the initial one. You understand it, right? You wait for a sweep of liquidity, a sweep
Mm-hmm.
of a major one. Smart money traders can also see those, so
Yep.
they wait for a breaker structure after those. Before After we sweep it, you still wait. You wait for the breaker structure to fail, and then you got your smart money trap on the lower time frame, and then is when you actually take it.
Yeah.
That's the strategy on a simplified concept.
Basically, it's like what you mentioned, double sweep, right?
Yeah, double sweep. But sometimes the double sweep might actually just be a double sweep without the breaker structure.
Mm,
It might just look something like this, and we didn't even broke no breaker structure here. But this reaction might be like beautiful, you know. There might be a breaker structure only in the 1 minute. People might still take it. A
mm,
good example of it would be news. With news trading, with news movements, you have a lot of these where you have like a double sweep. You have the initial move of the news,
mm-hmm.
and then everyone is trying to play the retracement, and then he actually climbs back up and takes them out, and then he actually goes the other direction.
Like, how do we know when to enter after the price has broken the efficiency?
Has tapped it, or
Yeah. I mean, like,
yeah, the efficiency is just a confluence, by the way. You
mm-hmm.
know, it's just like it's just a plus on our trading plan. We
Okay.
don't go based off of it, but we do need to see our plan being executed. Let's say you have the liquidity being broken. I think like an example you sent me the other time, you have the liquidity getting broken, and you have
Yeah.
an efficiency just underneath.
Mm-hmm.
So then there's a plus. You have the liquidity getting sweep. You have uh, a good example I like to see sometimes is let's say um, um, something like this. Mortise in red. This is a good example on for the efficiencies. So let's say price is heading lower and it breaks this major liquidity.
Okay.
It breaks this major liquidity, and you notice, well, price is going up from this major liquidity, is making a breaker structure, is most likely a fake one because we haven't still made a smart money trap of this level, and we still haven't tapped the efficiency. The efficiency is down below here. So in my
Okay.
mind, I think the efficiency will be tapped, and we still haven't made a smart money trap. So in my head, this will still go down, and then it goes down. It goes there. It gives you some structure, and then you place yourself uh, with the efficiency after the smart money trap, after the major sweep of liquidity, all those combined.
Mm-hmm.
But it's just a bonus. Sometimes you might have the efficiency also being tapped when the liquidity gets swept,
Correct.
but I'll still wait for the smart money trap.
Okay, okay. Okay, for the smart money trap, right?
Yeah.
Like we can look it like at any time frame, is it like M15 H1 or
Yeah,
is that
because you
very
have
specific?
like smart money traps on a higher time frame and a lower time frame. I think it's
Mm-hmm.
just like it's the structure thing. Because market's fractal, it will give like uh, smart money traps on whatever time frame. So I can be seeing this on M15, but I can also see it in M1. With our strategy, we want to see a smart money trap on the higher time frame, and then on the not the higher time frame, but like on the M15, let's say,
Mm-hmm.
and then a lower time frame trap on M3, M1, M5. You know,
Yeah.
but that smart money trap I talk about on the larger scale on M15, for example, is just a
Mm-hmm.
liquidity sweep
Okay.
because it's like saying price is going down here, so people would be placing themselves around here, and then we sweep them.
Yeah.
So this is basically like a smart money trap, let's say, a trap, because right now it's becoming kind of a resistance, but they
Mm.
would still place themselves there. In today's video, we're going to be looking at a GU trade that I took a week ago and my double sweep concept slash lower time frame smart money trap. So, first of all, I'm going to always be looking at higher time frames, right? We can see that we're mostly bullish, right? Continue the pattern of bullish momentum, right? Sweeping liquidity to the downside to then push up. And in here, we're doing the same thing, right? The same thing we did here, we're doing it right here. Going up, leaving inducements behind, meaning these lows or highs, depending on where the bias is, that don't take liquidity and are just in the middle of nowhere, right? That don't do nothing. So instead of price moving like this, price will move something like this, sweeping liquidity in order to give it fuel to go to the upside. Right? And because this was a trap, this level will become a trap. It's right here, right? So because we just had a sweep of this, right now we can expect price to either go here, or because of how weak price is being, we might expect price to go down here, because right now it's forming a bit of a liquidity, it's forming a bit of a support, and it has not, even though the liquidity was quite nice on this week, it has not been pushing forward immediately, or up, should I say. So we can mark out the liquidities. So we had a sweep of this, Right now we might have the all-time highs. We sweep this, and then we went to test this efficiency. So in case price is bearish, it's respecting the structure, and we might continue to the downside after this. We might have the continuation, like we were just discussing about bearish price action, or we might have this structure right here. I think this would be the swing high, swing low, whatever. Don't really care about those. I care about liquidity and seeing structure get taken, right? So yeah, as you can see, price left this order block behind. It already came to test it. It already made the move up. So why is it going down, right? I'm no longer trusting much of this level, even though it can still work. It has already mitigated once. It doesn't need to mitigate it twice, per se. We might have an argument that you might have the order block right here, counting as the candle, and this was an inducement, and then price swept it, came to it, and then reacted from it, which can be valid. And you might have had a risky trade inside of this structure and took advantage of this long. Hopefully not super long until the highs with a 30R risk to reward, right? But you might have gotten a win here. Sure. We can see that at the beginning of the day, this was EU. I was calling for shorts. And EU did the same thing, but it had a better liquidity down below. And I was calling for shorts as the XY had some efficiency above with a gap above as well. Meaning I was looking for DXY to go up. Okay? And that would be good for shorts because then DXY would go up, but then as it would go down, EU and GU would go up. Or no, no. Because that scenario would be after the efficiency. I was looking for a sweep of this and then actually go up in order to short both of them. So as we start off the day, see that London is quite boring, as usual. It starts to go down. So as it starts to go down, my theory is correct that DXY is probably going up at this point, but no way to position ourselves right here. So price melts. It takes this previous daily low, but it's super close to the liquidity, right? It sweeps the previous daily low, but it's super close to the liquidity. So you gotta always zoom out. Because even though it took this liquidity and it's a major one, I'm with you. We also have this, and you don't even have to zoom out that much. It's literally the same month. Okay, it's literally 6 days apart. So remember to zoom out, because even though yes, we had a liquidity right here, and here we still have this. And if you're a support resistance trader on the high time frames, you might be looking this as a support. So if you think to yourself that you trade liquidity and you're trading alongside these support resistance traders, which is against your market's logic, then you're completely disrespecting your strategy per se, or your liquidity logic. So then we even do some sort of better liquidity right here. 1 sweep, 2 sweeps, and then it looks like we're going forward. But that even made the price do equal lows with that same liquidity that we saw right here, right? So then what this price does? It sweeps it, right? It sweeps it, and we're still doing New York. So right now we finally got the sweep of liquidity. We got the sweep of liquidity that we wanted. We know that because this level was a trap, this one might become a trap, right? And it looks too basic because it's just pretty much a meltdown. People will be placing their orders right there. We swept the major liquidity, like we just discussed. And right now we're in a perfect zone for longs, right? But now this is the point where we differentiate ourselves from the SMC traders. So the support resistance traders, they're already out. They were already counting on this support levels, this right here as well, and the overall reactions. They're already out. Right now, it's the turn of the SMC traders. the SMC traders saw this sweep of liquidity, the smart ones at least, the ones that zoom out, and right now they're looking to long, potentially right here, as this is giving off some reaction from this low. And they're trying to anticipate the retracement, right? We're going to 4 p.m. timing in UTC+1. It's a good timing. And then they got liquidated. They got swept. Because now this is the true smart money trap. Right? We have the support and resistance traders being taken out right here. And in here we have the SMC traders being taken out. So as soon as everybody has been taken out, that's where I position myself, and you can see as this is the double sweep. You can have two ways of traps that are essentially the same thing, where you have a sweep of liquidity and let's say price. Let's say you have some structure right here. You have the sweep of liquidity, right? And you have the breaker structure that smart money traders will see after the sweep of liquidity. You have a second sweep, and then the correct breaker structure. So this was a fake one to trap people right here. And then you have the good one, where you would position yourself. And the other scenario could be such as this one, where you have a sweep of liquidity, not really much structure to trap people. Perhaps right, as you can see, M1 structure. I can see it just by the candles. As you can see, price stopped a little bit by this, right? But essentially, you can have the same as news. Sometimes you will have candles as wicks, just off the reaction, right? You have the sweep of liquidity. You have some run up, giving off a beautiful reaction. Let's say it gives off a beautiful candle with a wick like this as soon as we sweep it, and then we come to sweep it again, without much of a need of structure right here. But you can see that people are already anticipating this retracement as we swap the liquidity and as it's giving off a beautiful reaction, such as this one per se. So you have these two scenarios, which you can call it a smart money trap, a lower time frame smart money trap, or you can call it a double sweep, right? And as you can see, the market is fractal. The market is fractal, meaning the market, the way market will move in the higher time frames will be the same way market will move in the lower time frames. I'm not saying because obviously the higher time frames will dictate the lower time frames and the overall direction, right? But the market will move the same way, meaning you can see how the inducement of the sweep of liquidity was right here, right? It was this one. But instead of price sweeping it and instantly go higher from there, it did a second sweep, right? It did a second sweep. First sweep, second sweep of liquidity. And once you zoom in on this, you have one sweep and two sweeps. That's the overall strategy. You want to see a liquidity sweep, meaning a smart money trap on a high time frame, and then you want to be swinging a smart money trap on a lower time frame. But this is not the lower time frame, but you can see it as an example, as it would be the same thing. If I show you right here, you have a trap on this level because of the liquidity, and then you have a trap on this level, right? And as soon as we have the XY in our direction, right? Because the XY at this point was already, let's see what it was. GU is in a good zone, right? After the sweep of liquidity. The XY was already taking, as I already filled the gap, it was already taking the previous daily high, and it was touching this efficiency, right? So then I just told my students, buy GU 10.4 pips at this structure right here is what we can do. I can see it by the candles, but I can show you in 1 minute. It will look kind of something like this. I don't recommend you to go to the 1 minute that much, but if you can see it by the candles on M5, that's already valid. And you can see something like this. Maybe you would prefer this structure right here. It's still valid, but for me, it's too much. It's 40 pips. That's a lot. That's a lot of pips for my strategy. I would advise you to stay. If you can get an entry below 10 pips, that's cool. But it can be a bit too advanced and too refined. But 10 to 15, it's already amazing. And then I just went for my fixed 1 to 3 with the stop order, because I know I'm in a the liquidity, the smart money traps is executed. So right now price can just run, and I'm not risking it not being in the trade just because I'm waiting for price to tag me in on a limit, right? So in here, I'm positioning myself immediately, and as you can see, if you read liquidity enough well, price will just react like this, right? If I were to place myself on the limit, I'll miss this. I'll miss this trend probably, right? And then it swept some liquidity right here, as you can see, right? It was going up, going down, going back up, taking the previous low, and then running back up, and we got ourselves a win. It's just to tell you the overall structure that I was mentioning before of how price really moves, right? Like this. Sweeping liquidity, going in one direction, maybe, but sweeping liquidity. And even on a range, it's just sweeping liquidity, sweeping liquidity, sweeping liquidity, going from one liquidity to another. And then we got to win. We got to win, and perhaps you could even extend it to another highs, right? Because it was still valid. Maybe even get a 5R. But we stick to our 3, and as you can see, we got ourselves a win. 10.4 pips. This was 11, but okay. Might be different brokerage from the trading view to the FX sweep play. But yeah, as you can see, we got it right here. TP smashed. My strategy is basically composed of sweep of major liquidity, smart money trap, entry. And this is going to be the smart money trap part. But I've made it so simple that you can literally understand by M15 candles. Okay? So following the sweep of liquidity, right? Once you have one of these two liquidities getting taken right here, price will most likely deliver a reaction on lower time frame. Even if price wants to continue, it will deliver something. And so even if we sweep the highs and price wants to go lower, the first sweep will always most likely be a trap. Okay? There are scenarios where it isn't, right? Because SMC traders are not wrong 100% of the times, just 90. But you'll see sometimes that price will move off of just one sweep, and that's okay. And it's okay if we miss them as well. But I just found more profitability in waiting for a second, because I know that a lot of times smart money traders are always getting stopped out. So by me waiting for them to get stopped out, I increase my chances of being alongside the top traders, because 95% of the traders lose, and they're all trading SMC and ICT nowadays. So you always want to wait for a double sweep. I don't know if I was the first naming it this way, okay, but I don't want to be one of those that just keeps recycling concepts and naming another way. This is basically just to put it in simple terms, really. It's just double sweep, okay, it's two sweeps following the major liquidity. That's all it is. I don't want to be one of those gurus that keeps renaming crazy names to the same thing. And so this double sweep will equate to 2 M15 candles following the major sweep of liquidity. Okay, that will essentially be something like this. So you have the liquidity right here, the major one, okay, just like one of these two, okay. Just right here, we're going to take the buy example, and you have price sweeping it. And just as it sweeps it, you see that price comes back up. And off of this reaction, or some breaks the structure in this action right here between the two candles, well, between this last candle and the opening of this following one, you see that people will anticipate the retracement, will anticipate the move of the liquidity sweep. And so then they will get stopped out by the second one, and the price will deliver the move afterwards. The candles will tell you the history of what's happening inside. Because here you have the same liquidity, right? And this right here is essentially this. Oh, boom. And then, well, this is the forecast afterwards. But this is all that's happening, right? This low right here, it's this low right here. And this low right here is this low right here. And what you can see between the two candles is that price went here, went up, and then went back down. Okay? Went down, went up, went back down. Because you know how I say to predict smart money traps, you often need to wait for a breaker structure to be executed, and then for SMC traders to get out of here, and then is when you buy, right? So you have to see some breaks of structure on M5, M3, M1. But in this case, you can also go off reactions, because a lot of people will essentially see a candle like this on the liquidity sweep, a massive wick on it, price closing, the candle closing above the liquidity sweep, and people will essentially start to buy here without even a confirmation of a breaker structure, just off of the reaction of the candle. There's a lot of people that only trade the candle reactions. So in this case, we don't necessarily need to anticipate for a breaker structure. Maybe on M1 we're doing so, but we know that just off of this reaction there will be people that's buying, and so we wait for a second sweep. Always wait for a second sweep, whether we do a breaker structure around here with other candles, or just an overall second reaction to the downside, if we're looking to buy, of course. And so how we're going to take this is going over the next step right here. Is the entry. The entry will be a simple stop order on the structure that did the ultimate sweep. Now I say stop order because that's how I place myself, because once you start trading a liquidity strategy like this, and when you're right, you most likely predict the absolute lows and absolute highs of the market. With that being said, price will most likely just fly or dump, whether you're buying or selling, from your liquidity point. Which means that if you're using limit orders, price will most likely run away without you. Okay, because that's why I trade stop orders nowadays. And in M15, this will most likely represent a wick or a candle. And if M15 looks a bit ugly or the stop loss is too huge, you can also refine it to wicks in M5. So this will be exactly it. Price will sweep it, will go up, will trap people that's placing themselves around here. Okay. And then this was the high that made the ultimate sweep that trapped a lot of people. And so you, as soon as it starts coming back, you position your entry right here, your stop loss down here, and whether your TP, well, on highs or however you'd like to do them. I usually go for a fixed risk reward of 3R. Most of the times, if you're right, you get a huge reaction like this. Right? Price just tells you you're right, boom, we'll tag you in and go your way. But like I said, there's multiple ways of going with this. All right, you can wait for the candle closure, wait for price to come back, tag you in, and then go in immediately in your direction by using a limit. You can do entry on market execution, however you'd like. I'm just telling you the overall strategy and how I do it, but you can implement it in your way, of course, and refine it to whatever works best for you. Now, I'm just not going to tell you this by draws. I'm also going to show you multiple examples in the market. So you have this line right here, which represents the liquidity, of course. You have 1, 2 sweeps. This is all M15 candles, by the way. You have 1, 2 sweeps. Even here, you could say, well, here we do a double sweep right after this. So what's up? But even in this, like, your entry would be essentially around here. So in here, we did something like this. And I position myself perhaps on a double breaker structure here on M15, or on some sort of M5 candle as we zoom in on this, because this is M15 candles. And I actually took this trade on a funded account, and this is all EU. So this is perfect if you're a EU or GU trader. And you can see that those beautiful reactions I was talking about once you're right. Here, same thing. We have a liquidity sweep, but this is London session. So if we change sessions, you essentially need to wait for another double sweep within the same session. And so you mark the lows of London right here as soon as you start trading New York, and you see this beautiful candle. Okay, this is your first sweep. It goes massively up, right? Following this sweep right here, price goes massively up. It opens right here on the next candle. But what does it do? It goes back down again. And then it goes up. So in here you can clearly see what I mean by reactions. Because people will definitely see this amazing reaction of price sweeping this liquidity and reacting like this and buy it immediately. Some of y'all might say that I'm bullshitting because you would never place yourself around here. But in here you have price that's already printed. You have the candles that are already printed. So you say you wouldn't position yourself, but as soon as you see this one single candle, right? If you don't count the second one, if you only see this, you will most likely think that price is going to go up from here. And you're right on the bias, you're just not right on the timing. Because then it does a second sweep to it and it finally goes up afterwards. And here, same thing. You have a major liquidity sweep, as I marked them in red. You have one sweep, two sweeps, and then it goes down. Even this high respects this one. It doesn't necessarily sweep it. And this, again with the reactions. We're going off of M15 candles right here. I'm sure in here, we're sweeping structure to the downside. So we're making that smart money trap, but also a reaction trap. People say, maybe I wouldn't place myself here. Like, you need to be honest with yourself. Because in here, the candles are already printed, and perhaps you did trade it, and you did get a stop loss around here, because you were putting it right here on this first sweep. Because we swept the liquidity once, we went super down, even did a break of structure right here. First sweep, second sweep of liquidity. And when does price move? Off of the second one. And the charts that I'm showing you here, they're all from recent price action on the USD. But I can also pull the graph right here. You can see the same thing. Major liquidity right here, right? One sweep right here, two sweeps right here, and then it runs. This example right here, one sweep, two sweeps, and then it goes down. You see how we're going from one liquidity to another, right? And where? You see this red line right here? To another, making a double sweep I showed you previously. Why I stopped trading SMC, smart money concept trading. And the reason why I stopped trading like that is because it doesn't work. It simply doesn't work. Now, I've been trading for 4 years. 2 of those, I think it was SMC. And basically, the logic isn't simply there. Like, there's no... Sometimes there's logic, but for the most part, there's no fucking logic. Like, let's say... Because the whole strategy, for most people, I don't know, saying like there's a lot of good SMC traders out there, but like if your whole strategy is like break of structure, order block, retest, and long it, like nah, this shit is not logical. The market just doesn't simply work like that. And I see those guys trading like, and they think they're trading with the banks, they're following their smart money and all of that. Bitch, you're just like the retails. You're just like the retails. Because sometimes I see like let's say here, like this is basic. Like price was here, it dropped around here, broke structure. Okay, how many of smart money traders you think that place themselves here? A lot, no? What do you think happened? Like, they saw a break of structure and decided to short it at the order block. Okay. But they don't zoom out or look at the other stuff. Like, they don't look at other traders. They say they're smarter than retail. They're the smarter money. But look at this. Trend line here. If you go on the higher time frame, you see one touch, two touch, three touch. Like the retail money, they're placing themselves here. So basically, they got the same entry as the retail traders. So are they smarter than them if they got the same stop loss? If they're placing themselves around the same area? Like sometimes, you have what I was saying, like break of structure, order block, break of structure, order block, or break of structure, order block. And let's say they're placing themselves around here. Okay? But this whole thing is a trend line. So they're placing themselves on the same area as the retail traders. They're trend line. So they say they're smarter than them, but they got the same entry. I don't get it, boys. And another thing that's really unlogical is like, why so many order blocks? I understand everything. There's a lot of order blocks. There's like institutional blocks for smart smart money, like the algorithms put their orders. Like let's say this is order block, right? This order block, this order block, and my problem with smart money is like, which one do you take? Seriously, which one do you take? Because they're all order blocks, but I can tell you what else they are. They're dog shit. Because as soon as price comes here, I can guarantee you, you're gonna try to long it here, boom, long it here, boom, and you got the initial order block. Now the initial order block is the most important one, and this one might work maybe, but for you to lose like already 2%, and here maybe you can win some, but that's a maybe. And for me, looking at price action right now, I can guarantee this order block is gonna fail and price gonna come here. But even if it worked, like you already lost 2%. Like you're gonna make three back maybe. Okay. You got +1, but if you were diligent enough, you could got to 3. But you just got 1. And this is just on this case, because most of the time you see mad order blocks on just like one. This also an order block. I just didn't put it, but like you see like 5, just for you to lose it on all of them. But at least some wait for confirmation. I'm not saying all smart money traders trade like this, but there's a lot of charts I see for smart money traders, and it's just bullshit. Like, for example, here you see a break of structure here, right? Okay. Smart money traders, they're gonna place themselves here. What the price did, like they don't see higher time frame. That was a major high right here. So boom. They don't see like all this range, and all retail traders put themselves here. They think they're smart money because they don't trade support and resistance, but they took their trade on this order block, right? They make the break of structure right here. But they don't see that this is a resistance for smart money traders. You get like the intelligence behind it. And I'm saying that I'm being ironic, obviously, because this is dog shit. Like, please, like, your strategy doesn't have to be too complex, but it needs to have some logic behind it. Like, if your whole logic is like, okay, going up, order block, long it, like, and we all know market doesn't move like that. Like when you go to these fake gurus and stuff, they say like, oh yeah, trading is easy. You just see this, you long it. You see this, you short it. Yeah, my guy. Yeah. Come to the real market and chat to me next time. But yeah, guys, this is just a brief video on why SMC trading doesn't work. Like, focus on liquidity. Like for me, that's the best. But if you don't focus on liquidity, at least focus on some logic. Even if you trade SMC, like, think with some logic, please. Just don't go like break of structure and order block. That can't be your whole logic behind it. Like, zoom out, go to the higher time frame, get a daily bias, get some sort of confluence in, man. Don't be dumb losing out 5%. And plus, man, I see, like, this really hurts my eyes, man, when I see this. Like, remember when I put all these order blocks here, and like guys have already placed some limits like this, man. Like, imagine the order blocks right here, man. I'm gonna put this shit again. Like, I see charts like this. And these are guys, like, sometimes this works. Like, they gotta make you hope for something. Sometimes this works, but like, this is guys, I've seen these guys, like, they make 20% in 1 month, but in the next they lose all of it. They lose their account. They even got lucky, they get funded, they get a payout, but next day they lose all the funded accounts. It's crazy, man, it's crazy. And really hurts because you see them get all these limits in and price just boom. Now you just lost 3% in 1 day. Like, you think you're a professional trader by this? By trading like this? Nah. And they take the smart money. Like, man, SMC has got so popular now. Like, you think the banks don't know how do you trade? You think they don't know this? Think they just not gonna manipulate and take you out? Because, like, back in the day they weren't so relevant, but today I can guarantee you smart money traders exist. And that's what I'm always like preaching on my YouTube channel and on my strategy. You see me always using it. I'm gonna do more videos on it, on how to spot it. But it's really important that you guys like think, okay, if this happened, like, is everybody placing themselves around here? If they are, I don't want to be one of them, because 99% of people lose in trading, so you don't want to be a part of the 99%. You want to be a part of the 1%. So if everybody's shorting, you long it, motherfucker. So just by looking at the chart, can you tell me the reason why the blue order blocks work and why the purple ones don't? I'll give you a second. Can you spot any difference at all? From the blue supplies, the blue demands, to the purple demands and supplies. And for reference, SMT means smart money trap. So essentially, the blue ones, it's obvious, it's the good order blocks where you want to be placing yourself, and the purple ones are smart money traps where you don't want to be placing yourself. But why do some work and others don't? It's not just clear market structure. It is, but there's more to it. Because if these are smart money traps, it's usually because they see a different structure than we do. And what they see is normally just a BOS and stuff, but here we took out this liquidity, right? Went down. It's not much valid because it already ran up a lot, but we can count it as valid. He gave up this move, but kind of forget this one. But we see we took out liquidity here. We made a liquidity cycle. If we broke this, now we gotta break this to then break this. Okay? And this is on the daily market, live market, like you're right here, huh? So we broke this, retested it here, and it worked. And why did it work? And whilst we were kind of bullish, you can say change your character here, we have these order blocks and price didn't respect them. Why didn't they respect them? And we broke all this, and as soon as we came here, price didn't respect it again. And we have all this liquidity, and price is simply not respecting. Or I can say we broke this, still not respecting. We broke this, and price came back, it did not respect the order blocks you're placing. So The difference, guys, if you didn't spot it yet, the reason that makes a good, should I say, a valid order block, a valid supply and demand, is if the order block had taken liquidity previously. If you noticed, liquidity here, order block, liquidity here, order block that took the liquidity, liquidity here, order block that took liquidity, and retest. Because when you see smart money traps, it's usually order blocks from lows or highs that didn't take shit. Like this. What did this do? It came retest here, but you see this as just a low in the middle of nowhere. Same as this. This just did this, but once the movement is too long, like it's already done. It retested the order block in the other sense. You're just asking to get stopped out here. Here, this didn't take shit, and it's equal lows. This took a bit of liquidity, but it's essentially still equal lows, and we took out major liquidity. And like I said previously, we had to complete the liquidity cycle. So we gotta come here. We broke this, now we gotta come here. Break this, red line. That was here, okay? Just for a quick explanation, liquidity cycles, liquidity moves from liquidity to liquidity. Basically a range. Liquidity liquidating each side of the range. If you get what I'm saying. But this isn't like the holy grail I'm showing you guys. Just because a supply or demand took out liquidity doesn't mean it's going to be valid forever. Like here, we took out liquidity, now it's valid. We test it out, we go on the direction. But it doesn't mean like we have the order block that retested, okay? The retest. And this didn't hold up. It didn't hold up because it's against the market's bias. And it's against our liquidity cycle. Forget the stupid order blocks, because like just in the chart there's like 1,000 order blocks, guys. I can put 1,000 order blocks here. Like this is an order block. Even the wicks are order blocks in lower time frames. You get to a level where it's easy to identify this. Like this order block, this order block, this no order block. Like this piece of shit is an order block. It did a little movement, it worked. But guys, watch out for, because like there's a lot of order blocks, but doesn't mean they're all valid, you know, because most guys like to test everything out, and I'm just saying the valid ones are the ones that took liquidity, because I don't want to see you guys get wrecked by the 1,000 order blocks that you just put in one move like this. Like you have your order block here, 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 and you test all this shit out and price just wrecks you. So yeah, if you want to look for an order block, look for something that took liquidity previously. And like I say, if you don't know where the liquidity is, that means you're the liquidity. That's the word of the day. Alright. It's been a quick video, but yeah, and let me not finish yet. You can see it here on live markets today. Like some people might find this shit bullshit, and I'm just speaking nonsense about smart money traps, but okay. Even this took out liquidity. Well, took out liquidity. It's in the good zone of liquidity, let's say. And it did a break of structure. Now you have these two order blocks, even the initial one, and it didn't hold up. Now that's a subject for another video. That's the MSU I want to teach you guys on how to spot smart money traps. but it's essentially when we do a break of structure too soon to liquidate everybody, to stop out everybody that's placing themselves early, like smart money traps do. They see liquidity go broken, they see a break of structure, they place themselves. But like, it's too known now. It's too known. Like, market just needs to liquidate them again. Now, because we broke this, now they think this zone is valid, but they were actually right all along. It's just that we just gotta like liquidate everybody out of the trade. And I even sent it here on Discord. Link in the description if you want to join. I sent out this, and this is on live markets, guys. The timer, you can see the timer just here. If you're a profitable trader, you should get this right. I'm gonna show you a series of setups, and you have to tell me if these are good or bad. In other ways, traps, trades. So I'm gonna show you the hourly right here. Okay, let's go down in time frame. I'm even helping you here. We're currently bearish. You have the lows. You break previous daily highs, previous 2 days highs, broke this inducement. We came to order block. So what you think? What you think of this? I'm gonna go on lower time frame. I'm gonna have this here. Pause the video, go back, and decide for yourself. Don't try to lie to me. Just don't lie to yourself. Is this a good or a bad trade? In other way, a trap. Okay, so what you think this is? Yep. So yeah, it was a trap, guys. Why? Clearly no BOS on the lower time frame. This whole shit is just too close, bro. The order block, right? It's good, it's decent, but it already been tested here. If you go on a higher time frame, and it just came multiple times, just a resistance for retail traders. But most importantly, no, I'm gonna show you this first, because we broke this order block, because this order block didn't do shit. It's just here. It's not a good order block, guys. It didn't came to liquidate nothing, so just bullshit. We liquidated this, so now we must go higher. And where to? Right here, guys. You have inefficiency in price. Inefficiency in price here, here, and this big ass imbalance that we have to come. And I even let you guys know this on the Discord. Again, you can join this. It's free. Link is in the description. You can check my vision on a daily basis. I even shared you guys here that once we were on the block, I always said this is some bullshit. We're going higher. We're going to the efficiency price. And even on the day after, price was still playing around here. And I said, we're going up. And then you can look to short. Okay, guys, so what about now? We broke the highs I was telling you about. We made the efficiency. Still have these lows. What is the trade now? Is it a good trade or is it a bad trade? Pause the video right now, decide for yourself, and continue later. So, if you said a good trade or trap, let's see. It was a trap, guys. Why? Because it didn't came to make the true break of structure. And there was no inducement around here for me to place myself, at least for my strategy. But also, we didn't came to do a MSU. So we didn't trap smart money traders. The zone was good. The zone is good. Don't get me wrong. But like, imagine for people that just trade like BOS, they just hold on. Like the smart money traders that don't do shit. Where is yeah. Like your zone is good, but like imagine just the people that trade BOS. Like they see this, they're gonna short at the same time as you, and you don't want to be that guy. You want to wait for a search and destroy MSU, trapping all the people around here, and then You got the true BOS and you can short. After it trapped everybody here, look what happened. Got the trap right here. We got the true BOS. Let me see if we can find the order block. Okay. Let's say this is the order block. It's big as fuck, I know. Let's look at 3R. And we also have confluences to come lower. We're bearish. We have Asia lows. We have inefficiency in price right here. This FAG, this inducement low that didn't came to do shit, broke this right, but it's bullshit. So let's see. So now you're in. Normally, maybe you would have come a break even. Okay, so maybe you would have come break even because we break these lows and we came right here. You can't be right all the time, guys, but at least it was a break even. Like there's a lot of break evens in my strat. That's just because you have a good reading of the markets, but you don't get the win, but at least you get the break even, you know, because at least you read quite well to get at least get some movement. Now we're the following day. We just make efficient with the price. We trapped everybody that was placing themselves around here due to the drop. This was the NFP big impulse to the efficiency and to this line. And right now, pause the video and let me know if this is a good trade or not. So, what you can see is price beautifully dropped. Why? Because we take out liquidity on the higher side. Now we gotta take the liquidity on the lower side. And I can guarantee you this trade will run until 7 hour until to the lows. And if you check on the higher time frame, we got a trending line that was broken and a trending line that was to be taken. So this is the question right here, guys. Which side has more liquidity to get taken? And that's how you catch the good trade. Now we have the NFP trade that's coming to our target, and the following day we might have another trade to complete the trend. So let's see if this is a trap or not. Broke out of Asia eyes. We did a change of character, and now you gotta tell me, is this a good trade or a trap trade? Pause the video. Let's get to it. There's a trap, guys. Like I said, didn't wait for the MSU. So now we trapped everybody here. Right. We came to this order block, tapped it perfectly. Now we have this another order block. And now you gotta tell me, because this was a trap, is this gonna be a trap? Let me know. 1, 2, 3. Let's get to it. Tagged in. As you can see, price is playing around here, but you can see there's a major liquidity just here. And we broke it. So there you go. And as you can see, guys, this worked because structure was bearish, broke the lows here, trapped everybody that was placing around here. Boom. So this right now is protected. It came shooting down. So right now we had this valid zone. And we took out the inducement. Took out everybody that placed themselves here on Asia. And because this was a trap, this most likely will become a trap. Okay, guys? And we had Asia lows as well to be taken out. in the Discord. Again, this is free. Link is in the description. I send all my trades there. I gave out the signal, but I refined my entry too much and price just came down and never tagged us in. But now, broke the major lows. We did a change of structure. So tell me. And we got the entry below the inducement. So right now tell me, is this a good trade or is this another trap? Price is going up beautifully. And are we gonna take out these highs? And boom, as you can see, if you said it wasn't a trap, you got the correct trade. And why did this work? Because we trapped everybody around here. We trapped everybody around here. Everybody that was longing, that thought this was a change of character, and they got trapped around here. We gave major impulsement, a sell to buy, and price move from one liquidity to another. And as you can see on the Discord, I send out this as well. I said you guys EU vision, and we also had a trending line. We had this, and I told y'all I was gonna do this, and that's exactly what price did. And I also sent out the trade. So right now, broke one liquidity, went to another, or it's just a break of structure. So is this a break of structure? Is this a liquidity? Will this trade work? And is this lows protected? Or is price gonna keep shooting down? That's the question. Let me know. We got CPI in a couple of minutes. Is this trade protected or not? So we're tagged in. By shooting up and shooting down. And this, guys, was a CPI trade. I'm not gonna go over detail on this one. I already made a video explaining it, how I catched this 8R trade. You can see it on Discord. I sent it. You can see the beginning, the progress, and you can see we even had a trend line that was trapping even more traders. This is a beautiful part of trading and understanding liquidity. Look at this motherfucking ping pong. Sold here, bought here, sold here, and all these profits 8R, 5R, 4R. Here we did 6 or 7, I don't even know. And it's just understanding liquidity, understanding where's the liquidity at, where's the traps. This will be a super advanced video, so if you're feeling overwhelmed and I'm going too fast, don't hesitate in watching the video multiple times. Even if you're like at medium or even slightly advanced level, don't hesitate in repeating this video multiple times and try to backtest it and really understand it for yourself after you watch the full video, because there's gonna be insane value in this. So yeah, be ready and let's get to it. So we're dropping down. We have a major liquidity right here. I marked it out, H4 liquidity. We're at Friday, first Friday of the month, so you already know NFP. You can see it by the move here. We're dropping down. You can say like we're doing a liquidity cycle right here. Like we were in London, we were dropping, breaking structure. We gave out a fake BOS. I'm gonna mark it in purple. Everything that's in purple is like smart mini traps kind of thing. You can see we're breaking structure and then boom, just liquidate everyone that was placing themselves here, and then you got like this protected high or strong high, whatever you would like to call it. Price doesn't move like this. price moves like high, low, high, boom, breaks inducement. Now this is a strong low. Now we break higher, breaking higher, and then broke lower, another strong low, and then you buy to then go higher. So this is how price moves. We got this valid zone which has been tested, which now has been tested during Asia. We broke the inducement right here. Again, the inducement is just like a fake low. Whenever you get the right movement or retest, like whenever you get the strong low, strong high or strong low, you'll have like smaller retests. They don't really retest it and leave imbalances. So we broke it. So now we have another real inducement against strong high, which is marked by these blue boxes. We're having Asia. We got reasons to come down. We have the previous daily low, and we have our H4 liquidity. Okay? So right now, we're dropping to the M1. We're dropping to the day. And let's see. We have the correct movement right here. Right? You can see we had this liquidity right here, if this thing wants to, yes, which was also like giving double bottoms in Asia. So as soon as price broke this, and if you anticipate, trading Asia is very important, session liquidity is very important, especially Asia if you're trading like European and American pairs, anything that's not in an Asian pair, of course. Price drop this, and again, liquidity is just, and the way I place myself is placing myself after everyone has been taken out. So here we took out support and resistance traders, okay, because they were seeing these touches and they were placing themselves around here. Boom, we got them out. Then we took out the liquidity. We made an initiation or a fake breaker structure for smart money traders. Smart money traders, they see a they see a run of liquidity, they see a breaker structure, and they try to long it at the POI. But then that's when I come in, like we take them out as well. So we took out support resistance traders, we took out smart money traders, and we came to break inducement right here from the low that was right here. Okay, so small little liquidity to get taken to fill the imbalances of the previous low. So now we got all these traders taken out. We got the fake breaker structure, boom, smart money trap. Now I got the real inducement and the real breaker structure. Once the real breaker structure happens, you can place yourself, and as I like to do in my strategy, I like to place myself in the inducement. So you have some imbalance, you have like I was saying, boom, you have the real breaker structure, and then you just place yourself on the inducement right here, and the protected low is right here, so you shouldn't come lower and just continue to shoot higher. So yeah, and essentially the MSU logic is because this was a trap, right now this will become a trap. You understand? Because smart money traders are going to look at this and, oh, we're actually wrong. We're not actually bullish, we're actually bearish. So right now they're going to look at this as a protected high. But they were right all along on the initial position. So we write it out. We had our accumulation was all of this. We have our manipulation taking everybody out, and now we got the distribution, AMD. I also made a video on that. And yeah, as you can see, like we're on a smart money trap. We're incentivizing smart money traders to come in because we're giving them some movement to the downside. So now we can continue to add positions because we know this inducement will be taken out. Because then again, like I was saying, this is like the secondary high, which you want to call it, that's the gap that's in the gap of the imbalance and the order block of the real inducement, because this doesn't mean shit, because this didn't take out liquidity. Okay, this didn't took any, so this is your strong high and valid order block, of course. So then again, you can add this another position. We had this been tested, the order block, which everybody is placing themselves around here. Again, support resistance traders are seeing this massive resistance. Smart money traders, I'm seeing we drop lower. So now we're coming to retest it and drop lower again. But that's not what is going to happen, right? We give them a small initiation. And because we know this will become a trap, we can buy it here. Take out the inducement again. Put your stop loss in the protected low. That took liquidity once again. Again, your strong lows, strong highs is liquidity. It's not the basic structure you'll see. You'll see like this. Okay? It's like I was saying. And then we end up taking the real high. The real high, not the inducement, sorry. And test the high of Asia that was protected as well. Okay? And this will give enough movement to NFP, for NFP to happen. Enough lots. NFP will have enough liquidity to move. Because then again, they need lots, essentially. We're not gonna go to all of that. But yeah, and then we're just entering ourselves on the movement on the spot. We're not waiting for the whole movement to happen, so everybody's gonna see it, right? And then once we come lower, like, everybody's placing themselves around here, okay? Because they will see this as valid break of structure instead of a liquidity, like dumbasses. So yeah, then NFP just runs. You can place yourself on the double break of structure. You see this, you place yourself, and then you get it. Obviously, don't trade NFP, because risky as fuck. But that's about it, guys. And another advice I can give you is don't trade like this. Don't trade the inside all of this range. Don't trade internally. Normally, I don't trade internally, just like I'm trying to kind of adopt scalping trading to my trading now, and I do take some internal trades. But if you really want the best movements and the best risk to reward and the best likelihood success rate trades, you'll trade externally, so after the range, because all of this shit is just noise, and for you to master this, you can't master this in days. You have to backtest for months and months to get to this level. Okay, so then you have the all NFP movement to break the H4 lows, and this is just recent, guys. I'm recording this at the 14th of October, and I'm just giving you moves that happened last week. So for you not to say this is bullshit, okay? Because then again, once I'm covering advanced subjects, people don't understand shit, and because they don't understand it, they just come to comment like, ha ha ha, what are you talking about? Like, because you don't understand it doesn't mean like I'm the dumb one, okay? And just because I don't have ICT balls in my mouth doesn't mean like I don't know how to trade. So open your mind, listen to what I'm saying, and maybe, matter of fact, open your journal and you'll maybe see why you're losing. We had this movement right here that I was talking about that broke this small little range. So now it's protected. I have this inducement, this low that doesn't mean shit. Broke it. Matter of fact, I'm going too fast. We broke Asia right here. We're going lower, giving small initiation to the upside, breaking structure, but still we have this inducement right here, and price is saying to people like, get on this because this is the low. Okay, we're giving them a fake breaker structure. We're breaking Asia. Now because we broke Asia, all of this shit is also a smart money trap. Okay, because we're breaking structure lower. Everybody's placing themselves around here, and then we take out Asia. And even when we take Asia, like we give small initiation to the downside, then we break, and we come test it. I mean, I'd have to go on the seconds maybe. You could short it here, because this was a trap. Right now, this will become a trap. Okay? Because they're all seeing this. This was a liquidation, not a breaker structure. But they will long it anyways. Because they don't give a fuck. They will just see the break of structure, put the point of interest, and long it that way. That's their logic. So now we had the real inducement, testing out the order block of the valid zone. And just before it, you can see more fake breaks of structure to just incentivize traders to come and trade this order block. And then they get taken out. Support resistance traders, smart money traders, whatever, cause this 1 touch, 2 touch. But I mean, if you're a smart money trader and you're placing yourself around here, like I can't really help you, cause like you're placing yourself on support essentially. So you're trading the same way as the support and resistance traders. Like I've been saying this, but yeah, some people just like keep defending it like it's the holy grail of trading. So yeah, because this was a trap, you already know this will become a trap. Okay, and you just take advantage of the movement. So yeah, we broke this inducement right here to come test the big ass imbalance of the NFP. Alright, but also you can say like this was resistance for smart money traders, price testing around here, incentivizing traders to come in by this break of structure. Okay, and then we just take everybody else that is placing themselves around here. Smart money traders are seeing this run of liquidity, initiations, break of structure, but then we're smarter. We always wait for a double liquidation, double run of liquidity, whatever you want to call it. Like, stay calm, don't get in the trade after you see the initiation. We run it again, trapping smart money traders. Now that super resistant traders, smart money traders have been taken out, you place yourself, like you can see here. And then, because this was a trap, this will become a trap. And this took out this, right? But we're still on a downwards movement because there's still efficiency with the price on the higher time frame. And we have this inducement right here as well from this movement that I really didn't take it. Okay, so we move out to another day. Another day we have the previous daily high that was taken. We have this massive trend line. Okay, we took out Asia highs, and even you can see support resistance traders, Asia highs getting a lot of liquidity. We run that. Okay, we sweep that liquidity. Smart money traders are getting interesting now because we break structure, fake breaker structure. Boom, another run of liquidity. Smart money traps. Willing this one right here, and you can place yourself like this. And I'm saying all of this, and you can, because this was a trap, this will become a trap, and you can just trade all these inducements right here. Because, like I was saying, this how structure really moves. Broke inducement, you go high, lower. Break inducement, go lower. Break insignificant high, you go lower. This right here, insignificant, break, go lower. And then if you want to be more conservative, you can wait for the break of this. For the break of this even, this is also inducement right here that I forgot to mention. and then you watch it get broken. You wait for a small little breaker structure internally, and just test it out. In this case, you could have tested the inverted fair value gap. You have the uh, old FEG, you have the new FEG, and it's like a big magnet to the price. And then you can just come to the Asia low or target the inducement. When we see the chart, okay, we're bearish for the moment, okay, until we see this liquidity getting taken, okay. As you can see, this is a perfect equal low, okay, so we're gonna be looking to short until we sweep this, all right. I can also see that we have a previous daily high here, okay. You got to take those into consideration, not just because price went like this and now you're gonna short it here, okay. Don't just be a normal SMC trader. And I can also see these efficiencies right here. You can kind of almost count this as one, but yeah, just gonna count this one because they both at the same spot. And so I'm gonna start the day off. It is a 2nd of the month on a Friday. So what does that tell you? That tells you NFP. So we will try not to trade before NFP. You got London going higher. You might short it here because we just swept Asia right here. We are coming to this order block, let's say, or the whole zone that you might consider. But if you don't zoom out, or if you don't see the depth that price has come to that order block, like you know that this is a equal high, right? And as soon as we give off some reaction, right, that's just to trap people. But in here, if you're smarter than the dumb SMC traders, okay, I wouldn't consider this a trap for SMC traders, but I would consider a trap for support resistance traders, because right now we're building on support resistance around that level. Okay, so we're coming to the end of London in the session which I like to call New York trap timing, but it was London that ended up sweeping this. Okay, so right now we got the previous daily high swept. That's a nice liquidity. And people would place themselves around here, and support resistance traders would place themselves around here. But because it's a whole another day, you need to wait for another trap. Okay? And London's coming to an end. To what I was telling you about the New York trap timing session. Okay, it's a session when I don't trade, when I don't take any positions, because it will most likely take out the highs and or lows of London, and it will also be the hour between London and New York session. And then as soon as New York comes, it would also like to sweep the highs and lows of London session. Meaning, if I position myself in a trade towards the end of London, I'm risking the fact that the other sessions like to liquidate the price action of previous sessions. Okay, most of the people would only adopt this concept in the Asia session, where you have the Asia session liquidity. Most of y'all should know that. When you see Asia's high getting sweep, you look for a short position. When you see Asia low getting swept, you look for a buy position. But the thing is, there's session liquidity in every session. Okay, London likes to sweep Asia, New York likes to sweep London, and it can also sweep Asia if London doesn't do it. Okay, so in here you risk, maybe here it would work, but as I've told you, New York's about to come, and you have the high of London and the low of London. Okay, so in here your short position might have worked. Okay, but not everyone places themselves like this. on a super small time frame. Most of the people would wait for this sweep of liquidity that we just waited for and a breaker structure to the downside. Okay? Either way, they maybe got stopped out break even here. So, right now they got their breaker structure. Maybe they're waiting themselves to place around here, or they're already in. But regardless of that, market will look to take people out. But when it's looking to take people out, okay, it's not just stop ons, it's basically anything, okay? It's a matter of taking people out of trades. It can be stop loss, which in most cases it is, but it can also be TPs, it can also be break evens, whatever. It's just to get their lots. All right? So in here, we're basically going from one liquidity to another to now where? Test out this and go to the downside? No. Okay? Because after sweeping this, we still haven't made a smart money trap. So what did I tell you before? In here, in the previous daily high level, after this, we're taking out the support resistance traders and the slightly dumb SMC traders. Okay? So then, after taking out the SMC traders, we got to take out the support resistance traders. Okay? They're basically seeing a sweep of liquidity, a breaker structure, okay? And they're going to position themselves on a retest. Okay? Don't tell me you don't see this. All right? That's why I'm doing it on the replay mode. So you can go along with me, okay, analyzing the chart and giving your opinion in your head. So, because if I were to give you or the chart already set up, you might have said, oh, I will never position myself there. But then the reality is you would. Okay? So in here, we take out the support resistance traders. And now, after giving out this reaction, do I place myself here? Okay, be honest with yourself. Right now, I talked about session liquidity. We swept the London low, we swept the London high. We go from one liquidity to another, okay? From one liquidity to another, then possibly to another, okay? Because this was a trap. Normally, this will be a trap, right? I'm going to tell you you're correct. You're correct. You're correct in that sense. But this trade, it isn't a good trade yet. That is because if we do the smart money trap on one session, then it's fine. But right now, it's the New York session taking out the high of London session. Okay, so it's two different sessions for the setup. So if this structure was all made in a single session, then I would look to take this trade right here. I would look to take it in this structure right here after seeing this candle reaction. But because it is another session that's taking out the trap, that's sweeping another session, okay, that's giving out the overall trap on the larger scale, okay, you have to wait for another trap. And that is because there's people that will not trade both sessions. There's people that will jump in New York. They will see this. Okay, even SMC traders, they can classify this as liquidity. They will see this, and then they will not get trapped. They will not get trapped because they wasn't trading London session. Or maybe they would trade this, but well, they wouldn't get trapped. So, in essence, if we're doing this on the same session, you can trade it right ahead after seeing the sweep. But if we're doing this on two different sessions, meaning right now it's New York and this structure right here works from London, then you got to wait for a second sweep. That second sweep, in other sense, a trap. And right now, you see that we make efficiency with the key level that we had made before, right? It's keeping different things in mind, okay? It's a matter of adding concepts all together. not just having break a block and another block and shorting or buying depending on where the position is. Okay, that is a strategy, but that is not a strategy. Okay, that's not enough. Okay, I don't think you will be profitable just by doing that, because if you read liquidity quite well, then you're always getting trapped, like we're marking it out right here. Okay, so right now I'm gonna give you another secret, okay? Because this video is full of gems. Don't hesitate in watching this back and backtesting this day for yourself. In here, we have London session being bullish, New York session being bullish. So right now we're coming to London close, which is usually a retracement of the day. Okay, it's a session just after local morning of New York. It's still New York session technically, because it's going to be the afternoon of New York, but it is towards the end of local London, where's the London close, which most of the times it is a retracement of the day. Think of this, use this as a confluence again. Okay, you need multiple things to your strategy. So if London and New York are both in the same direction, London close will usually, it's a matter of probabilities. Okay, it's not 100% certain. Trading is all about putting the probabilities on your side, so you have the more chances of winning. All right, because market will do what it needs to do. Okay, and London close will usually be a retracement of the day. Usually, okay, not 100% of the times, but it is a good confluence to know. And in recent timings, it has become my most profitable session because, well, not because of this, but because of the nice retracements the other day it gives. But you also gotta have the other stuff in line, like I was saying. The liquidity is getting taken, the traps, okay? So, and another thing is that London session, if New York moves a lot far from a London session price action of London session, London close will look to moving away to make efficiency with price action. Meaning, London will can move a certain way. New York might move the opposite. In this case, they were both the same, and London close will move towards London price action. You might have an example where London moves a certain way and New York moves the other. And let's say London bullish, New York bearish. London close will most likely be bullish to search efficiency with London price action. If London was bearish and New York was bullish, then London close will most likely be bearish to look for London's price action. Meaning, this whole thing is London's price action, and price action is currently here on London session, and we'll look to come to it. Okay. But I'm already talking about London session, London close session, and it's only 3:40 p.m. on UTC plus 2. Normally, London close starts at 5 p.m. UTC plus 2. So let's go down to the 1 minute and see what's happening here. Okay, so we're getting more structure getting taken. All right. Okay, more structure getting taken. Right now, 4 p.m. We already did the trap right here. Okay, we already did a trap right here as well. So right now, if you want to position yourself after this, you can easily do it. Because in here, we give out another trap on the lower time frames. Can you see this? Okay, price going up, breaking this structure, to then break it higher again, to now break it lower again. So in essence, this was a fake breaker structure. Mark it as purple. This was another sweep. And right now, this is the correct breaker structure. Okay? I don't even remember if the trade was this, but I'm gonna just take it as it is. And you can just take it to the trap, or even to these levels right here. You don't have to be greedy like that, but you can really do it once you trade liquidity. So because this was a trap, this will for sure be a trap, and you can easily target it. Okay, you can target this whole block, and that will give you about 4 hours. Okay, let's put it like this. And you could position yourself on a stop order after you see this breaker structure right here. Okay, so let's see. I'm gonna let the trade play out like this. We're on the 3-minute. Okay, you can see we have a slight reaction from their order block in order to trap more people to place themselves there. We're making equal lows with it. Okay, and then we get it taken. And then you can take advantage of an easy 4-hour trade. At this right here, 5 p.m., it's where the London close started. Let me mark it out for you. Right here, 5 p.m. And what can you see at 5 p.m.? A nice and easy retracement, end of the day, in order to just make the counterpart of London and New York direction. Okay? Yes, this whole thing was New York, but it's better to just consider this as London close. Okay? Remember, because the volatility might die out, but I mean, it's just a nice and easy movement. Okay? It's you won't get the craziness that New York sometimes give you and take you out of trades instantly. It will be nice and easy, and sometimes even a fast TP, sometimes. But in this case, we got it right here. And like I said, if you want to target the equal lows, which is why we have this high time frame sentiment bias, okay, you can easily do that. But right now, we already made this trap. We already went to this liquidity. So right now, I would not be surprised if there's some reaction out of this level. Okay? Let's see. But either way, we already out of this. We already out on the trap. That's just to tell you, okay, we could have gotten tagged out break even. Depends if you put yourself break even or not. Okay? But that's just to tell you the fact of like, you can be correct. You don't need to be fully correct. Okay, you just have to be correct enough, right? Because if I were to place myself here, my TP here, I would be looking for a 6R, and truth is I would be out break even. Even though price will most likely reach there, price also came to my break even level and tagged me out break even, and then went my way again. Okay? And it could have been stop loss as well. So it's not a matter of management. It's a matter of being just enough right. You don't have to be fully correct. I could even be wrong. And price just go massively up. But I focus myself on a smart money trap cycle because this was a trap. This would have become a trap. There were some reaction out of this. And instead of looking for the whole move, I just looked for a part of it. Okay? And I got myself a TP. Even though I know that this level could easily be tagged out. But what's to say price doesn't come higher to trap everyone that's placing themselves around here again and then goes there. That could happen. And you would also be in a trade for like 2 or 3 days. So wouldn't it just be better to get off of it on the same day? And then, yeah, as you can see, we would have been stopped out. And then price would maybe go there. Let's see. I don't even know if I have enough data on this. But yeah, price would go there. Okay? So you could have been right, but still wrong because of you being greedy, in a sense. All right, so keep that in mind when you position yourself. Sweep of this, like I mentioned, previous daily high. All right, and then a move lower, but then price decided to sweep it, but not give it a trap instantly. It was because of it was London session, was a bit slow, and normally I don't get many setups in London session. It's mostly New York or London close, like I was mentioning. And then as I told y'all, NFP prediction, it was going to do this. Then what do you know? It went down, and then boom, NFP, it went up and tagged out everyone that was placing themselves around here. Okay, I don't think I need to show y'all again, but this is this, right? The trap right here. And I'm saying looking for sells. And as you can see, 230, 231. Okay, this is live markets. This is right after the news. Okay, 230. There was an hour change. So instead of 230, it was 330 already, because just the hour change that there was. But yeah. So then, looking for something like this, I'm already saying it. Okay, everyone seeing this trap. Okay, if they were smart like me to see the trap, they will see this candle reaction and they will place themselves right after it. Me, I'm seeing it, and you can notice I put my arrow slightly above, okay, as a second sweep in order to come tag it. And I put my arrow down right at this level of New York, which would mean the trap. So then, yeah, I'm flexing in here, but you can see how that's exactly what happened. People that place themselves on the candle, on that beautiful rejection, got trapped. And then I'm telling people that this breaker structure is too high. Let's refine it. Okay. I'm looking. Let's do this. If price decides to go short, and I'm telling my people my entry, modifying the order, and then boom, sell EU right here. Give me my trap. Give me my trade ahead of time. All right. The analysis, the where I'm gonna be positioning myself, and is actually exactly where I'm at. Okay, because this is also, I need to be quick because these are 3-minute candles, guys. Okay, but I'm already telling people, put your stop order here or market execution here. Okay, and the stop loss will be whatever it's the highest point. And as you can see, that 3-minute candle did this huge rejection. So it was super quick and it was less than 5 minutes. But I'm telling people ahead of time. All right, and then put your stop loss to break even, boom, 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 and we got it. We got it. The price went there. We even were more refined. No, we were kind of the same. I just go for 3R. I didn't go for 4. I didn't go for the full trap. I just go for a fixed RR of 3. Okay, but we got it, and it was not just me. We also got students that took the exact same trade. This was a couple time ago. So let's see. Here we go. Sniper trade. That's the EU I'm telling you about, okay? You can see how it's the same structure. The trap right here, the trap right here. Okay? This guy, my guy Ferduz, literally joined us 1 day before this trade. You also got to win. This guy also got to win. Okay? You can see it's the same chart. Most of the times, I've been telling y'all that market doesn't move like this and it moves like this, which is completely true. But well, sometimes when you open the charts, you might just come across something like this and you don't know if we're bearish, if we're bullish, or whatever, because it's just a mess. And that mess just traps a bunch of people, because then you got price going higher, they try the longs, they get stopped out, they try the shorts, they get stopped out, but price went higher, so right now they're going to try the long at the initial order block and they're going to get stopped out again. That's kind of the reason of the smart mid trap cycle, the concept that I have. And look at this day. This is live markets, okay? I'm not picking up the chart from 2019 or something. You can see how price is going up, right? And then you might have people placing themselves around here and they get stopped out. But then because this failed, okay, this failed. Price is not actually bullish, price is actually bearish. Let me short it here. And boom, they failed again. Okay, fucking hell. Sorry about that, guys. Hey, that's the bitches, man. Then they get stopped out on the shorts. But even here, like, you got on the larger scale, meaning on the 5 minute, 15 minutes, you got on the lower time frames as well, and the 1 minute or so, because then you have price moving higher from this structure right here, okay, giving out the change of character is going lower. Now it breaks these candles, is going higher. You have people placing themselves around here, same thing. And then because this was a trap, this would also become a trap, okay. And same thing here, which I'm expecting right now, is for this. Okay, maybe not this because it retested it. But this to become a trap. And it's giving off a reaction right now. And you would see, even if the blocks are a trap, you'll see some reaction from them sometimes. Like here, giving us some reaction to go higher, but then it's just to trap more people. Okay, because there's people that will still wait for a confirmation. It's not just a touch of the block on aggressive. Like they will not have their entries on aggressive, but they'll wait for some kind of reaction. And as you can see, here it was going down. It touched it. It went higher. That's a confirmation for them to place themselves. So look at how many traps there are just in here. How many people just got fucked and they trade every single move and they'll get stopped out in every single direction. And what I'm expecting is that now price breaks this, okay, making it another trap because price is just doing basic structure, you know. Let's see here. Boom, boom, boom. This is what I'm expecting price to do. As you can see, the basic structure doesn't work. There's no basic structure. You might say, oh, but this right here, it's technically this. Okay, but at the meantime, in the live markets, you don't know where this lower high is. You might place yourself in here or internally, not knowing that will do this. Okay, because the markets are fractal. So even though it might seem like this on the high time frame, it's very easy to make it seem that way. But once you're on live markets, you don't actually know where the lower low is or where the higher low is. Okay, because you don't know where the liquidity is. You don't know where the traps are. So price just pulling back to a random zone and you long in it from there. That's just not how you trade. And then if we pull this up, which is exactly what I'm expecting, which it has happened until this part right here, right? You can see the same thing. Okay? Price going higher from here, breaking structure, boom. People placing themselves around here, stopped out. They see this fake breaker structure, they place their order blocks around here, stopped out. Okay, but they see this breaker structure though, put their initial order block right here, stopped out again. And then again, same thing over and over and over again. Okay? Stop trading like these dumb SMC traders. Their only strategy, their only concept in their strategy is a breaker structure and an order block. And that's how they trade. Okay? There's smart. I trade smart money traps, which will mean even in a sweep of liquidity, you'll still have a smart money trap being executed on lower time frames, and people will still get trapped. But if you're just a SMC trader that just like is just basically trading like this, I mean, I really got no hopes for you. Maybe with a good risk management, maybe with some good selectivity, I don't know, maybe you can be profitable, but this, it's not it. It's not it. It's not it. Unless this is more of the higher time frames, and here inside of this you have some liquidities getting taken. Okay, then we're adding more stuff. Okay, I'm not saying that you can't be profitable with SMC, but it's very unlikely because it has become so popular that everyone now trades it and just makes it complete basic bullshit. Okay, maybe in the beginning was something good, right? I used to trade at SMC. I wasn't profitable though. Uh, Maybe I trade badly, but I see these people trading nowadays. They just wait for a stranger character or lock, no matter the zone, trading every single day, three positions, look for a 10, 20 R because I can do that, have a 5% win rate, and they're consistently unprofitable. They're consistently unprofitable. And so it depends. It depends what you want to be. Okay? I certainly don't want to have those stats and not understand the market, because at least I have some kind of strategy that I understand what price is doing, where what price does is justified. Okay, and I'm understanding why price is doing what it's doing, not just seeing break a structure on the 1 minute. Let me place myself. I can stop chasing the price, bro. Just relax, wait for the liquidity to be taken, wait for everybody to get out of the trades. Because I'm waiting for smart money traps. I'm waiting for everybody to get out of trades, right? And 97% of people losing trading, right? Look out for some kind of structure. Don't just. Sometimes price will take liquidity, yes, but once it becomes too visible, okay, once you have this right here, and this becomes too visible for everybody, okay, price has already this direct structure. Because if you want to trade these, okay, you have to trade it on the spot. If you see this liquidity get taken, trade it on the spot. Look for a lower time frame confirmation here, and take advantage of the fact that you know this will become a trap because not so simply a breakage structure above. Okay, trade right this, and going for the smart money trap cycle, meaning this was a trap. Okay, so this would have become a trap, right? Because it's going to be the breakage structure for the for this move, for this liquidity sweep, okay, to go down below. You can take advantage of a win just based off the smart money trap cycle, and then you don't risk it by price doing the liquidity sweep, making a breaker structure that's visible now to everybody. Okay, now everybody's seeing this. You risk of price doing this, and then heading back lower. Okay, because a lot of times that happens. Okay, because it's just a matter of price looking for the liquidity. If it doesn't have that much liquidity to go a direction, it will search for more. I would never, okay, never wait for a big visible breaker structure, price to come all the way back down, and then me trading from here. Okay, that's a clear sign of a trap. You can trade spots where there are traps. It's just that you got to trade them at the spot. Okay, meaning this I knew it would become a trap, but if I wanted to trade it, I would trade it right here. Okay, for this movement, and then get out right here. Not waiting for this big movement to happen, then it's visible, then everyone knows that it's gonna come. You might know it from here, but you wait for a huge confirmation, then everybody sees it, and it becomes liquidity. Okay? So what about now? Now we sweep this, Perhaps you're going to sweep this, right? And you can position yourself right here. I mean, some people are watching this liquidity, correct? Do I want to be with them? No. Why did this fail again? Okay, you gotta always wait for a double sweep, because there are some SMC traders that will also see that, and that's where we come to the smart money traps. And if you check the overall structure, you gotta zoom out, boys. You see this New York low from the previous day. There's also this structure, okay? The real market structure, it's not this, okay? It's this. Sweep in liquidity and then go higher, okay? Because liquidity is fuel for price, okay? The price section is the vehicle, the liquidity is the fuel, okay? One without the other is nothing. So you have the sweep of inducement, you have this efficiency, things coming together because this level was a trap. You're expecting the one above to be a trap. Okay, same thing I just said here to here. Okay, it's always like that. The smart money trap cycle is always like that because people were trying to long it here and then they say, oh, we're actually bullish, we're actually bearish. Well, then they will wait for a short here, and that's how price will take them out consistently. Okay, this is why they get multiple losses because they see price take him out like this. Okay, trap, 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 trap. These are order blocks that I'm placing, and they're trying to long and short in here accordingly, and they're always getting trapped. Okay, we move on to lower time frames. We get that double sweep. Okay, but I still want some structure, and I'm not placing myself until we tap that efficiency. Okay, now we tapped it. We got some structure right here, and even on the M15, maybe a candle. Still not. Let's see. Okay, right now, look at this. Beautiful wick. We got a sweep here of this structure right here, and then we sweep it again for this level right here because people might not zoom out. Okay, there's people that just stay in the day. Okay, you gotta always zoom out, and then like you can place yourself on a structure right here. You can place yourself on a limit here. Maybe this is too high for you. Maybe you can place yourself on a limit here and have a better risk reward towards that level. I would personally just put myself on the stop order after making the breaker structure in case price just runs from here. And you can see 3R, that's my fixed target. That works perfectly with the liquidity. Place order on a limit, 1%. And let's see if this plays out. You see how we swept the inducement, went higher, and boom, target hit. As you can see, people trapped here, trapped here. You have to think that way. Most people lose. So you have to anticipate where are people positioning themselves. Because market structure isn't that beautiful thing most people do with the lines. They do it at the lines because market doesn't actually move like this. If I pull up the charts here, what the hell is this? Okay, you're not understanding anything. But I tell you, what is this? Sweep, sweep, then sweep. Huge trend line, sweep. Okay, sweep of this. Going from one liquidity to another, and to another. That's how really price moves. Okay, and yeah, you're seeing all that, but you're in replay mode, motherfucker. Okay, what is this? Does this look familiar? So I had a member of my community sending me a chart of him planning to short in this area. Alright, because this area took Asia liquidity right here on the previous day and it made the break structure lower. Correct. He also marked out this inducement right here, which is also a trend line that is being respected. In a sense, it's constructing liquidity for it to get taken later. I completely agree with that. The problem is, for this zone, once we go on higher time frame, once we go to the hourly, it looks kind of close to this one. I was telling him it's insignificant because the break is only like 0.5 pips. For it to be a real sweep, for me, it would have to be at least 2 pips. Okay? Like 0.5, it won't take anybody if they're placing the stops a little bit above the high. Just thinking like that. And if you go on a 4 hour, you can even see this. What does this look? This looks like a lot of highs together, which to me, it looks like a resistance. A resistance for support and resistance traders. Which means liquidity, which is basically against your whole logic of SMC. Trading with the liquidity against the support and resistance traders who don't know how the market moves. Yeah, how the market moves. The irony, because they're getting fucked themselves. Well, it might work, but it's just liquidity caught up together. And you just have to see, like, it's not just any breaker that's gonna work. There's a lot of smart money traps. And even here, for example, this will be a trap for sure. This will be a trap for sure. Because you have this inducement right here, these all lows caught up together. Like the price only has to mitigate it once. Once it comes mitigate a lot of times, that becomes liquidity. That becomes buying or selling pressure. People will get interested in these levels because that price rebounded from here, so people will expect for it to rebound again. But the thing is, it doesn't work like that. The more it rebounds, the more liquidity it builds for later, the better the liquidity will be. Let's say it doesn't go here. Let's say it just goes here. Well, I didn't lose money. I got this liquidity and this liquidity. So I'm just sitting on my hands waiting for either this or this to get taken. And once it does, once the price is here or here, I'll either buy or sell accordingly. If it goes here, I'll buy. If it goes here, I'll sell. And here is definitely the best scenario for the trade. For the trade to play out with the sell right here. We're still building up liquidity. So like I say, price takes one liquidity to go to another, and whilst it takes liquidity, is also building liquidity to the other side, right? It's coming to take this liquidity right here, and whilst it takes it, is also building this one, and it's also building this resistance right here on higher time frame. And really zoom out of the charts. Don't just see a breaker structure or a breaker block, and just place your POI and have it move like that. Alright? Really zoom out, place the trend lines, place the resistance out correctly. And don't just take anything for liquidity, which it is. All the highs and lows are liquidity, but if you consider this a liquidity, I agree with you, but just notice that it won't be valid forever. It was a sweep of liquidity, but now once the price has dropped down and made a breaker structure and made it visible, now it's a liquidity for later. In here, you can see that we sweep the previous daily high, but also the previous daily high from the day before that, sorry. And as you can see, we got a beautiful reaction, but there's a newbie mistake here, which is not zooming out, okay? Which is zooming out, sorry. And as you can see, we got this inducement right here, that's between the imbalance and this high right here that took liquidity, and that also forms a major resistance, okay? So higher time frame support and resistance traders will be looking to short around here, so having the same position as the smart money traders. All right, so what you want to do is wait for this liquidity sweep as well, which is going to be confluent to the second part, which is, I see, it's having the patience to not get in on this, because that's simply a trap. Okay? And why is that a trap? Because this is a smart money trap. All right, this is how smart money traders trade. They will look for a sweep of liquidity and the break structure, and then once price comes back, boom, it impulsively takes them out. And I know that because price just went impulsively up, and like in this case, a buy in order to sell. Okay, so the first one is look for a liquidity sweep. The second one will be another sweep. After that sweep, there will be a smart money trap in order to trap traders, and we'll have the smart money trap cycle, which means because this will trap, this will become a trap, which gives us confluence all right, and security that we know that at least price will reach out down here, even if we're wrong on a trade. So we can at least get a win out of that, or be secured enough to get a break even in the position. And what I mean, because this was a trap, this will become a trap, is because smart money traders easily change their bias. Okay, so here they were short, and then they see this breakout structure. They say, "Ah, no, we're actually not bearish. We're still bullish." So price took liquidity around here, which is true, but not really like that. And they will draw on this order block right here. So I got trapped here. But what price will do is this. But nah, they will get trapped on a short, trapped on a longs. Okay, and then we can finally look to short if we got our tree confirmation. That's timing, all right? Because you can have two identical charts, one in, let's say, New York kill zone and another in Asia. Right? If I'm trading GBP USD, an American and European pair, I don't want to be trading Asia session. Right? That's like going to the club at midday trying to get some pussy. If you go at night, you might get some pussy. But if you go at midday, then the timing is completely wrong. The area is good, but the timing is completely wrong. Okay? So timing is super important, all right? Even if the chart is identical on one side and the other, on one session and the other, the timing is super important, and the trade, the setup will have a different story in each situation, depending on the timing. All right. So in here, it started to be the London close. Okay. And so in the London close, I know that London was kind of bullish, New York was definitely bullish, and now the London close will be a retracement of the day in order to search efficiency with the London session. Okay, that's one of the secrets I give out. London close, super important session. Okay, and then as you can see, you just start to wait for something that looks good. Like here, you could have gotten your break structure here, like this, or you can even do it like this. But let's say we missed the entry right here, but let's say we placed ourselves like this on market order, and you look for this. Boom. So in here, we got the liquidity sweep. All right, in here, we got a smart money trap. So because this was a trap, this will become a trap. All right, and we got the timing. We got the three confluences. All right. So right now, let's see what price does. Boom. This was a roller coaster one. But as you can see, it was actually a retracement of the day, even following the next day, and eventually, super roller coaster of a trade. But eventually, we got it right here, or even here. Okay? So this is the power of reading liquidity, but also having confirmations on our side, like smart money traps. Right? You start to identify, start to add smart money traps into your strategy. You're immediately profitable. I can guarantee you that. Your reading of price will be astronomical, and you avoid so many losses by avoiding so many traps. I perfectly called a trap. Always calling out the traps to avoid them, and I called out the trade. And you got a full detail, a signal of the trade, breakdown, whatever. There's some EU charts in here as well, which are kind of different. But then eventually, you got the TP hit. So, would you take this trade? We broke major liquidity, gave out a changer character, and you got your order book right here. Would you take this trade? If you said yes, you're just falling on a smart money trap. So, Don't get defensive just because I said you fall under the trap, a smart money trap, and you trade SMC. Alright? Just, let's be real. You just fall on a smart money trap. To start, I gave out my vision on Discord for this day, okay? And I said I'll be looking for buys today once we break out this major liquidity. And people might often see me on the group and they might see the liquidity get broken, the liquidity I mentioned for the day, and maybe they'll see a reaction from it and they start saying, oh, yo, the liquidity was broken, where's the trade, where's the trade, where's the trade? And then they see that it gets broken once again. Because the way I place myself is I wait for the liquidity and then I wait for an extra MSU, extra trap. I can show you the trade right here that I took. Alright, 4R, blah blah blah. And I had a member of the community asking me, how did you know the sweep was over? Well, like I said, I wait for everybody to be taken out. I just follow the MSU. So the MSU is basically when we trap smart money traders. Because we break liquidity, we give out a change of character, but the change of character is a fake breaker structure. It's a fake change of character. So then we go out again, and because this was a trap, this will become a trap. It's basically the liquidity cycle of it. And now we gave out the real breaker structure, and price can move on to do its way. So most of the time, smart money traders actually have the good bias. It's just that their energy is completely on the wrong timing, because they're in too early. This was a trap. This will become a trap, and you can see we gave out some reaction of these order block. Come here, because we always give some reaction. Like here, we always get some reaction to incentivize people to come in, and then we impulsively take them out. And I targeted the liquidity and the efficiency with the price right here, in case this high is protected, which maybe will not, because it's kind of looking like a trap, and the XY looks like it might go down to fill up the gap. So if the XY goes down, GBP USD will go up. And this is how you'll avoid many losses. It just, you have the right liquidities, but once price breaks it, you wait, just wait for another break. Just wait for another break. You might see this reaction. You might start to getting some FOMO, trying to place your trade, but believe me, just relax, because eventually it'll take out again and go your way. It might not do a MSU. It might not, like price could have broken this and just go your way. But it's way safer to just wait for MSU. Because I can show you a million examples where price did not just broke liquidity once. You can see, for example, here on the 5 minutes. It's just candles, but you'll get some FOMO out of this. I know a lot of you will, because you see this break on this small little candle right here, and you see price is going down, is breaking internal structure right here. You can see the red candle is closing kind of below this green one, and this one definitely went below, and then just have price shooting up, giving another wick, right? And then you place yourself, then you look to place yourself, because these people got trapped, the liquidity got taken, and even these people placing themselves early got trapped. So you gotta think not only on a, not gonna say higher time frame, but like on a 50-minute time frame, but only on, but also on the 1 minute. If you don't know where the trap is, if you don't know where the liquidity is, that means you're the liquidity. That means you're the trap. When you're trading, you gotta define your bias. And in order to define the bias of EURUSD, for example, the influence on euro is super small. So majority of the influence on EU is going to come from the dollar. And how do you determine the bias for the dollar? You use the XY. Now, if we look at the XY, what we can see in this first instance is that we're bearish, correct? And so let's always go to higher time frames. And with higher time frames, you can see, well, we're bearish like since the start of the year. And with the higher time frames, you can see that we just took out inducement. Alright, we trade liquidity, so we can buy or sell in any trade. We just took out this inducement. We're making efficiency with price right here as well. Alright. Now the way we calculate bias is that we're looking at where the trend is, we're repairing liquidity, and repairing if the price is efficient or not efficient. In this case, right, we're making efficiency right here with price, with this whole block, and we're taking out this inducement right here that people might have used as an order block, for example. So there's liquidity underneath. All right. On the other side, I see efficiency here. So what you want to do is repair liquidity on both sides. You want to see liquidity get taken on one side and getting liquidity on your favor to the trade, to the direction you trying to trade. If we go even lower, you can see we took out a cause, and whilst we took out liquidity and we're going for another liquidity, which is this inducement, okay, which is this inducement with the efficiency right here. While we take out one liquidity to look for another, we're also building liquidity in the meantime. All right, so right here we have a trend line. So what's to say price continues his journey to the upside, takes out this liquidity, comes to the efficiency, and then goes lower to continue his downtrend, but also to take out all this trend line, which people might be trading. So knowing that DXY will probably go up, let's look at EU. So with EU, the chart looks completely different, but you can see we have some efficiency right here. All right, so we're expecting the DXY to go higher. So if the DXY will go higher, the euro will go lower. All right, because this is euro against the dollar. So if the dollar goes higher in value, the euro goes down. Okay. And here, same case, where we had the trend line on DXY below, in EU we have it higher, which is perfect. It matches our vision. Can I just, okay, put this in a different color? And so we're also taking inducements right here. We have efficiency right here, but there's also this one below. Okay. And if you also want to, there's also this order block that isn't so normal. All right, because this order block was when price was breaking higher and people looking at this. All right, because this, it's complex, guys, but if you can manage to understand this, price was going higher, okay, people placing their orders around this order block because they think price will move in higher highs, higher lows, higher highs and higher lows, and it's that simple. It is not. So here they get trapped, and then price goes up. As soon as it goes up, it goes without strength. All right, and because it just made this wick, it didn't close with a body above. And once people also see this, because this is also good for them, because this low took out liquidity and then it went higher, this also looks good for them. It might also look good for some guys that trade my strategy. Personally, I wouldn't trade this because it was news. Alright, it was crazy. So it also came to take out this liquidity. Sometimes it likes to take twice. Sometimes the traps are limitless. Alright, not limitless, but there's a lot. So in a sense, we got the low that took liquidity also get taken out. And then you got the correct breaker structure, which was with some confidence candles to the upside. And now you have your order block right here, taking just the wick. All right, you can take it, you can refine it just to the wick. It's still enormous. So yeah, we got the efficiency right here. And we're looking for price to go down as the XY will go higher if our predictions are correct. So right here, let's see, we're coming to the start of February 19. So this is recent, guys. All right, we go down in London session. And as we go down, we're breaking structure. Same for the XY. All right, absolutely the same for the XY. And so we just broke this inducement right here, this false high, making filling up this FVG, this imbalance on higher time frames. All right, and now as price took liquidity, you're gonna see price giving out a breaker structure. And if you're looking for this, you're absolutely correct, but there's a catch. All right, the catch is that, and even here you can see how we're doing the same thing as the XY, to the opposite, of course. You gotta invert the charts. The catch is that there's our efficiency just below. So there, the price isn't efficient enough still. So we took out the liquidity, but we still haven't tapped the efficiency. And guess what? We haven't still made a smart money trap. So what price will do is that here it will give you some reaction telling people, yeah, get in, get in, get in, get in, get in. Meanwhile, creating more liquidity to place themselves, for people to place themselves. Coming here to the efficiency as well of this area. And then what you can see is that we're taking also liquidity around here. And as we took liquidity right here, notice how our price is super fractal. Like we're looking for a smart money trap, on the larger scale, on the 15-minute, 5-minute or whatnot in here. But notice how in this case, on the 1 minute, on the 3 minute, we're breaking structure right here to the lower side as soon as we make efficiency, but this whole area became a trap. Then price is retesting, coming lower, incentivize more people to get in. At the same time, it's building massive liquidity around here. And as it takes so much liquidity, it begins to make another smart money trap, because this is the same case. It takes liquidity out, but calm down, because other people are also watching it. All right, so in here we took out the support and resistance traders. In here we took out the smart money traders. And now guess what? If everybody's out, now maybe you can look to place yourself. Because if this was a trap, this will also become a trap, but I'm explaining you that better. Now, in here, you could have maybe just gotten a small little profit. But this is not the position we want to look at. Alright? Because now we know price is going lower. But as price goes lower, now we did the whole trap cycle. Not the whole trap cycle, but a part of it. And we're in our zone. So, because this was a trap, now we're looking for this to become a trap. And why that is because they were right all along when they tried to long themselves here. But now that this high took this liquidity out and the price is going lower, like I said previously, how they think price moves from higher highs, lower lows, higher highs, higher lows, and lower highs. So if I draw that to you, it will look something like this. They think price will move like this, when it doesn't. So they were right all along, and now they will be completely off on this kind of area. So in here, they got trapped for trying to long, and now they're going to get trapped by shorting. And I'm confident of that because here, first of all, we just made the whole smart money trap here. Just made a smart money trap here where we took out the liquidity, we made incentivize people to come in and then trap them with a sell to buy, a good indication that we going higher because we sold impulsively and our price is going to react from it, and like impulsively as well. And if you look at the XY, it's the same story. It's the same story. Here, break a structure, trap, right? Trapping everybody that's placing themselves around here, and still got the efficiency. So in here, we're not yet at the efficiency, while in EU, we already at it. But we also got our order block below. So maybe price will go to our order block. Maybe we can refine it even more. But let's see. Let's see what price gives us. Okay. So price has continued to go lower. So as it hit its efficiency on the XY. Let me see. It probably has in here. You can probably count this one as well. Also, because I'm noticing this inducement right here on higher time frames. You can take out this one, but also on higher time frames is always more prevalent. You got this imbalance right here and price taking this out. So right now we're super close to it, and we already did it on EU. So sometimes you can't have everything perfect. Okay. Now we're coming to the order block. What's the XY saying? The XY has finally taken the EPA. So right now price is efficient with the XY. And I took this inducement. And so I was saying that it doesn't look everything perfect, but in fact it does. In fact it does because it touched it. So right now, and we're watching EU touch the order block. So as soon as we take the order block right now, I'm expecting some breakage structure to the upside. And here you can have your breaker block, all right? If you want a conservative position, you can wait for the price to break this order block. If you want something more aggressive, you could have maybe taken the position while you had this, or use the inducement right here. Because price is forming new highs while it's not taking liquidity. So this hasn't took liquidity, so you can maybe use it to your advantage. Place yourself right here. Stop loss under the low. See if price tags it and target the next liquidity. So either the trap for a 5R or the trend line, or the previous daily high. Now you're being a bit too greedy, but for 8 hour, 5 hour, you can definitely get it. So in here, let's say you target for a 5 hour. All right, fucking hell. So let's see. All right. And now let's say if price breaks this, you would place yourself on stop order, on aggressive, and possibly target the highs right here for at least a 3 hour. All right, so you're in both positions. Up. And now let's see what price does. Okay. Okay, as you can see, just broke the trap. We just broke the trap, and while we broke the trap, there's also still the trend line. So the high that took out the trap is gonna get also taken, because everybody's seeing this, and it took it with a buy to sell. And before it took, it gave you some reaction to incentivize you to the trade. So it's not just that you know or don't know how to read the traps, is that perhaps sometimes you know, but just because of these small reactions that price gives you to the downside or to the upside, regardless if it's a supply or demand, it's what makes you take the trade. It's what incentivizes you in. So you gotta be patient, because you're already patient to wait for your zone. You're not just patient in seeing the exact setup, seeing the exact smart money trap getting executed in order for you to place yourself in a good setup. Because in backtesting it's cool to wait, but in live markets, once price is here and coming to your area, all right, sorry, not here, because here you'd be placing yourself on a smart money trap. But even if you place smart money, for example, in here, all right, you waited for the trap to get taken. Now you see some reaction. It's that. And now perhaps you could have been shorting. The thing is, like, you have the whole trend line, and this will also become a trap in higher frame, because this also took no liquidity. It just came to mitigate this. But let's look at the XY. What is the XY saying? The XY just took out the trend line, and I think in here it's not being shown, but there's a big gap here. There was a big gap here, if I'm not mistaken, in live markets. So if in here there's a gap, that means price has to come fill it on the XY. And if it has to fill it, it has to come lower. So if the XY is going lower, it means that EU will continue to go higher. All right? And because this looks too basic, it's also basically a trap. So in here, you got your take profit on the small stop loss position, and perhaps you still got your other one running, and as you can see, price will take them both. So hey guys, if I don't know why this is still is this good or not? Well, fuck it. And check out the XY. It's also come to just follow the order flow, meaning it was going lower, it came to retrace to mitigate this block with the efficiency right here, the key level, and it went back down to follow is order flow to the downside. We're going to be documenting this last one, which also gave us a funded account, which I just explained, with 3.5K, which I was kind of down on the account. I was $500 down. $500 was to make the drawdown that I had, then 3K to pass the challenge. In the high time frame bias was just that we left these equal highs, we swept this. So right now we could have went higher to do this trap. So I'm always prioritizing longs, especially on futures. And so as the day is about to open, what we do, go on the day and we spot the liquidities. Liquidities above, liquidities underneath. I know that there's a previous daily high, which obviously will get taken. And we have some liquidity underneath, but in here, London, this inducement is not that special. What I most like was this inducement or this previous daily low. All right, so we have these three. Let's say disregard this because it's small little liquidities. And so I have my liquidities, but I must adapt to the markets. So as soon as the markets open, I'm just waiting to see what it sweeps. Because sometimes it might just go towards a liquidity, it might just go up and not give me a setup, even though I predicted the longs well. We always wait for our zones. We have a setup, we have a plan, so we always wait for price to show us that before we even trade. Just because I know where price is going, it doesn't necessarily mean I can trade it, and y'all shouldn't too. The market opens right here, kind of slow. It gives a sweep off this, okay? Could have been a short position, but I don't really like it off the rip. And as you can see, it gets kind of slow. So a tip that I'll give you, when the market open tends to be volatile, of course, right? And it tends to be with strength. But when it's volatile like this, but on a minor scale, you know, when it's just going all over the place, but still in the same little range, somebody's gonna get trapped. And what I mean by somebody, sometimes is in cases like this, because this was a trap, this became a trap, right? Because shorts got trapped right here. Price went above, and because it went above, people will be anticipating the buys right here. And it was also building a trend line right here. And we also had the two liquidities underneath that I mentioned. But the reason why I shorted, most importantly, is because yes, we swept the previous daily high, and we did one sweep, which the shorts could be valid from here. But as soon as it starts moving like this, like I was explained, it tends to be a trap. And then this completely reminds me of a Forex setup, chart trade. And in Forex, you can't just simply wait for a liquidity sweep and trade it immediately. You gotta wait for a liquidity sweep and then a smart money trap. So in this case, exactly what we did. We swept the previous daily high once and then swept it again after making some change your characters down below after the liquidity sweep. So people got trapped by positioning themselves around here and putting their stop losses above this high. And then that's where I position myself. And as you can see, then it's also 5 o'clock UTC plus 2. And if you don't know, go check my video about London close. London close is the retracement of the day. And if you check, yesterday, same thing. London close timing, retracement of the day. So then I just positioned myself on these weeks right here on the M5 candles. But if I pull up to M1, you'll see that there is some structure over there, as there is this one right here. So we swept it, then I positioned myself on this level. I've also sent a signal, let's say, to my students, because I also got future students, right? And I said, this is risky, but similar to yesterday's chart. Look at this of the day and look at the day before. Same thing, right? Sweep of liquidity, London close. Well, in here we have a smart money trap being executed, but it's pretty similar. And that's exactly what I want to get into. You only trade one setup, one strategy, one setup. You don't play around. You're binary about your decision making. You know exactly if you have a setup or you don't. Be honest, if you trade liquidity, would you trade this? Would you short it here on its order block like this aggressively, seeing that structure is bearish, and we're basically following the money, taking liquidity here, right? Testing this out, going to from inducement to inducement. Even it's what I teach, right? This I took liquidity, this is mitigating, also taking out liquidity, this is mitigating this by also taking out this inducement that didn't take liquidity, and this inducement right here, it's also combined with a previous relative equal high, which makes it a liquidity for support and resistance traders. So would you take this? Because SMC traders nowadays, right now, has become a norm, where say we trade liquidity because we're taking out support and resistance traders, right? Boom, liquidity here, boom, liquidity here. Okay, that's true. But if we're all trading like this, there's no liquidity left. We take this support and resistance traders, right? But what about the whole 90% of traders that are SMC traders right now? The ICT ones. And it has become so basic that what you'll see is that price simply doesn't give a fuck and will tag you out. That's why, and I keep bringing this up, smart money traps are essential and are everywhere in the markets, right? So right here, took out this smart money trap. Now, because we took out liquidity, make fake breaker structure. This is a fake one, alright? This is dog shit, okay? If there's no smart money trap, the price won't move yet. Still needs more liquidity. It can go down from here, but do you want a 30% win rate or do you want an 80% win rate? So wait for everybody to be taken out. Wait for support resistance traders. Wait for SMC traders. And even look at this. The structure look good, right? What about the trend line? Like boom, boom, boom. Right now you can take it. Maybe in the future it will look like this. Can also do. That's why a lot of strategies can work. And two things can be true at the same moment. But right now, I just focus at this. You got the support and resistance traders out. And because they'll switch their bias so quickly, just because they'll just trade breaker blocks. Like they'll see this initiation short. They'll see this liquidation higher. For them is not a liquidation. For them is a breaker structure. So you'll have this order block right here. Even this one. It's even worse. Alright, and for me that's what? That's me. For me that's smart money traps to go target. That's Confluence. That's price will go lower. Like, what did this do? This is nothing. It took this liquidity out, but maybe it's testing this. Okay, but stock shit. Didn't take no liquidity. And if a higher low hasn't taken liquidity yet, I mean it's basically useless. Right now you're coming to the end of the day, but if you want to take a long-term trade, you can do this. I don't do this. I do it more on the lower time frame, but you can even do it like this, retesting. Just keep the stop loss lower, and you can target the whole smart money traps, and you can target the lower lows that's following the structure, the order flow. Alright, and you just keep it like this. Let's see how this does. This is on 1 minute. What you expect? And it was just fuel for news as well. Liquidity isn't just about support and resistance or trend lines. Liquidity is about everything. It's just about getting people out of trades. And getting people out of trades doesn't just mean stop loss. Majority of the times it is stop loss, but it can be taking out people stop loss from or break even or even TPs. It's just about taking highs or lows. Just about getting people out of the trade. So institutions and the algorithm essentially can get your lots, because every time you place a position you're actually placing two positions. Okay, if you were to short here your MetaTrader, you would see a shorting position here, but once you get your TP it will say a buy order because you bought to get rid of your selling position. And if you were to buy, and it will hit your TP, you would sell the position. So every time you place a position, you're actually placing 2 orders on the market. Alright, because you have to get rid of your order, right? That's how lots are liberated into the market. That's why we gotta factor in everything once you trade liquidity. So because SMC trading has become the norm, market nowadays, in these recent times, has been placing a lot of SMC trades, SMT trades, smart money traps, essentially, is what I'm trying to say. And so you gotta see them, spot them, avoid them, and trade after everyone's. A good rule I would say is, once you have your liquidity taken, just wait for a second sweep. Alright, just wait for a second sweep, or wait for the breaker structure. Don't place yourself just yet. This order block is dog shit because it will get taken, and then you have your true breaker structure. Have the fake one, and you have the real one. Essentially like here. Fake one, real one, or a real one right here, if you want to be more conservative. I'm gonna do this with a pair that I don't even trade. I'm gonna do this in UJ, just to show you how it's in all domains. You got this relative equal lows, correct? 1, 2, 3 touches right here. Okay, we go lower on the time frame. We take them out, being impulse. All right, we even do some more takeovers. Again, when you see this no breaker structure, maybe you got people placing themselves around here. Okay, they get trapped by this being impulse. This being impulse, and then follows up by a run of by a run. Okay, but let's say you stay on higher time frames, and you saw price break in it and doing a change of character, correct? You saw price taking out the big liquidity. For support and resistance traders, they're out. You got your order block right here for the smart money concept. But this breaker structure, this change of character with a wick, doesn't look that good. Plus, your position is like every other smart money trader. So, boom, you got taken out. And even after being taken out, they even do another trap. Like, this is the craziest thing about the market. Like, when do you know the trap is over? Well, has everybody been taken out of the trade? This is why it's a complex subject, but the structure here is clearly bearish, and given our inducements, this is not protected, and it gives too much, enough movement, enough liquidity for it to go down, sorry. We got a trap on the larger side and a trap on the lower side as well. So in here we already did the trap on the higher side, and in here we did it on the lower side because we did another breaker structure, super liquidity and breaker structure, because this was in the same day. Like, if it's too higher on the time frame, it's too visible, it's too noticeable for most of the people. So you really gotta think on a larger scale, meaning multiple days, or the 15 minutes or intersession, and then on lower scales, because the only break structure you got here is this one after that. And then if we're taking all this whole trap, it's 1, 2, 3 days that it has taken for it to be complete. And then once we take out this smart money trap here, where you would place yourself, you just wait, and then you got the correct pressure structure, and you can place yourself here, because we took all this liquidity out. And guess what? This beautiful trend line that got taken. And then you also got another Confluence, which is the liquidity cycle. We liquidate the lows to liquidate highs. This is how price moves from one liquidity to another. Liquidate the lows to liquidate the highs, to the lows, and out to the highs. If you notice as well, what's this? Nice trend line. Okay, so this is how you gotta see the markets, and you can also expect for price to go lower, probably because here we had this trend line, okay? They got taken out. Boom. Market shift, or whatever you want to call it, and place yourself on the mitigation and take advantage of the dip. All right, because we also went up a lot, so now we gotta retrace. And now that we took the lows, took the highs, now we're gonna take the lows again, probably, maybe. And you got this, like, how do you know when the move is over? Like here, okay, we took out this liquidity, and you can even see like it did a move here. All right, it's breaking structure internally, and it looks kind of good, okay, because we break liquidity, we break it again, and then we do a breaker structure. But if you look on the higher time frame, you got a trend line, and we also got this trend line, beautiful right here to target. But just wait, then we hit the trend line, but you don't short it straight ahead. We give small little initiation. You can't see it on a 4 hour, but I guarantee you there's a breaker structure here. All right, and then we run them again, and once we run them again, you got the true move that's delivered. And that true move is to take out the spots where the liquidity is. For example, this trend line. And then we just continue with the order flow. But if you know in the cash flow trades, it's like this. You can see how we took it. You got your inducement, and you got price testing right here. You can easily place yourself on this line, on this imbalance, and get a beautiful risk reward. And I'm saying that in a trade, in a pair that I don't even trade. That's how my logic works in any market. I've got a student that actually started to trade oil and has been killing it lately. This is his dashboard. Every single one of my students has his personalized one, and he has just been killing it. If I show you some of his trades, a lot of them are coming for oil. All right, look at how many wins and how many losses. Okay, this is EU, right? Another one. Look at the vision. Look at the vision. And yeah, even recently he got another one that's like this. Okay, with a $300 profit. Not even prop firms, personal capital. All right, $300 bagged. Since then, I started looking at oil by myself as well, and it has been delivering some nice moves ever since the US and Iran situation started. So we're gonna be looking at that, right? Because the strategy works in all domains, right? So first one, 17th of June, right? You can have this trade where just price is coming back to the efficiency. It's taking some liquidity right here, right on this level. And if you zoom in, right, just gotta do this for y'all to understand really, because it's not just about a matter of coming to that zone. It's also doing a lower time frame trap in that zone. Okay, because you got the liquidity sweep right here, you got the efficiency being tapped, and inside of that, I've kind of drew a line here, but it's basically to tell that we did this reaction, went up, people might be anticipating that, and then prices sweeps it again. It's what I call the double sweep, or a lower time frame smart money trap, is whatever you want to call it. And you notice as well, as it's London close, price tends to retrace. Retrace because London was bearish, New York was bearish, so London close most likely be bullish. As you can see, if I show you, this is London as the blue, this is New York in the yellow, and then London closes this kill zone right here, which, as you can see, little bit of a retracement, but then we follow it to the next day. And we go to take another liquidity, okay? Because price moves from one liquidity to another. But on this trade, it wasn't a short after the liquidity. We can look for trades to take the liquidity, right? So you can trade before the liquidity gets sweep and after the liquidity gets sweep. So in this example, we're just looking to trade with the trend, trying to follow the liquidity sweep. So You could have maybe had a trade here, but then again, this doesn't make a smart money trap inside. It's just a sweep of Asia. But then this has become a trap. And as this becomes a trap, we sweep it once, we sweep it twice again, and it's London close. So you can just expect the retracement, right? The retracement. But on this occasion, we might have had different bias in. No, they were both bearish. They were both bearish, but we could have had a situation where London was bullish, and because price was here, price could just go a bit up to look for efficiency with London. But that's when New York moves a lot, right? In this case, it didn't move so further from London price action. But yeah, it was just to look for the liquidity, and you can also have the confluence of the smart money trap cycle, because this was a trap. This will become a trap. I may be going over some advanced topics, some stuff that's really advanced for some of y'all, but I've done everything on my channel. You just have to go watch it back. Okay, there's a bunch of videos on how you can learn these terms. And yeah, we got the liquidity sweep. So then you can look for shorts in another day, maybe. And here, yeah, that's another position. There's another position because we sweep it, right? We don't do a double sweep, but it is London close. And in London close, I have this rule where I don't necessarily need to wait for a smart money trap, right? It's good to wait for one. Maybe we can have one on the lower time frames, as I'm seeing that this week was taller than this one, and it kind of made it like that. But that's irrelevant. That's kind of like lower time frames, super low, and M1. All right, I can just tell by the wicks. But yeah, there could also be this one because when it's London close, the day is ending, right? The London close comes after local morning of New York, and I tend to not wait for a smart money trap just because how slow it is. Price just wants to go to the overall the direction of the day, or opposite direction of the day. Sorry. If I show y'all again, London close is a super good confluence I have. As you can see, London was bearish, London was bullish, London was bearish, New York was bullish, sorry. And then as you can see, London close is the same direction as London was to make efficiency with it. All right, in this case, just open with a gap. And we would have beat DP, but I think it's because, no, it's not over a weekend, but yeah, something crazy happened and you would get yourself TP. So there's two scenarios, just to go over really quick. There's two scenarios for London close. Either you have London being bullish and New York being bullish as well, and then you can have London close as the opposite direction, right? So bearish in this case. And if you have London bearish and New York bearish, then you have London close bullish. If you have London different to New York, right? You just take the London close direction as a retracement of New York, so the same direction as London was, right? So if London was bullish, then London close will be bullish, and if London was bearish, then London close will be bearish. That's if London and New York are the opposite directions, right? So we can continue. We have a sweep of Asia right here, but no smart money trap effectuated. Okay, I could easily just draw on liquidities everywhere and enjoy trades, right? But I'm just taking the ones that are confluent to my strategy. Like in this case, it took liquidity right here, but I'm not trading Asia, right? And there's no way to place myself here. Then, yeah, price just continued to go down. Nothing to do in here. Super internal. And as we go down, I noticed that we come to an efficiency at the same time we broke this Asia low, right? I'm gonna show you the efficiency real quick. It was the one we were talking about in the beginning of the video. If I go to the 4-hour. Yeah, okay, you can see the efficiency right here, right? You mark the highs if we're looking to buy, and you mark the bottoms if you're looking to sell. Okay. Actually, this is better here, right? and then you can have another one here. So in that specific day, I'm gonna do the 5 minute just to be more understandable, because we're gonna have to be looking at smart money traps that are on the lower time frames. And was it this day? Yeah. As you can see, once again, another long close trade, because these are super good, super relevant nowadays for my strategy. And you have London being bullish, New York being bearish. So like we discussed, London close being a retracement of New York, so the similar direction as London. And but this one was a large one, because I think it. Oh, okay. Was it okay? This one wouldn't be hit TP. This one I just left it like this because it's valid, but it's taking a long time to play out. Oh, as you can see, I didn't even notice this just now. So yeah, hey, the vision is quite nice. So yeah, I just leave it for now because it still hasn't played out. Then what comes after that is some internal ones where we have a sweep of this previous daily high, right? And then once again, another London close, guys. Another London close trade that just goes beautifully. And I'm mentioning that I'm using my strategy, but because it's a commodity, and I've seen this on gold, I don't usually put myself break even on this. All right. So on Forex, I would trade my stop loss to break even as soon as we're 1 hour up or we broke some structure. And oil, I wouldn't put myself break even as I do in futures, if you're checking my futures series. So once again, guys, London being bearish, New York being bullish, you can just anticipate some retracement towards that London price action, right? Even if price is overall bullish, you can have these reactions from it if your stop loss is quite tight. Then this one, my student caught it as well. You have Asia being swept by London, then it becomes a trap. Then New York is doing kind of equal lows here, delivering a trap as well, right? Because it's sweeping this. Because you always, even though New York swept London right here, right? So it has already made two sweeps, right? The first one and the second one after the Asia sweep liquidity, and it's testing this thing out. Because we're in an overall different session, right? Because this is New York and this is London, you gotta wait for another trap, right? So it sweeps back lower and then sweeps back high. And once it does that, it's also London close, so you don't necessarily need to wait for a trap, even though one has already been executed, which is even better. And then beautiful meltdown, some news probably, or unexpected news related to the war, and he got tagged out and TP immediately. And yeah, because even though we have a floating trade here, you can look for the major liquidity, which can be tagged. Then I don't think there was nothing on this day. You can see how this kind of sweeps Asia, but I would still consider it Asia. If not, if this was London, then you would have a sweep of London, then it comes lower, then it comes back higher, and then you can trade it because the trap has been made. But because I will still consider this as Asia, because Frankfurt only starts right here, it's basically Asia for me. But you have a sweep of an inducement right here, and then price reverses from that. But nothing too clear for my strat, so nothing tradable here. Again, in here, maybe a short here after taking this out, but then this level didn't become a trap because price is still overall bullish because of a trend line we just drew here, right? Because yeah, this trade was under the trend line, which was a bit risky, but yeah, you have three trusses on the trend line. It's not gonna hold forever. Then it decides to take it. As it decides to take it, we kind of have two sweeps around here. if the indicator is correct, this is not tradable. Yeah, because this timing is the New York trap timing, which I don't really trade. Is the hour between London and New York, so it isn't really tradable. If this was already New York price action, I would take this. If I was watching the chart, price sweeps the trend line, right, with a big manipulation move, big buy in order to sell, and then keeps going down, makes this a trap, sweeps it in New York, good timing in New York, and inside the kill zone, and then it continues to head lower, I believe, or it would have been a stop loss. Maybe it would have been a stop loss, but it depends. It depends on how you would I take it like this. I don't know. Seems a bit too high of a bit too big of a stop loss, because if we take in consideration the smart money trap cycle, this will become a trap and end up being. But so I think I would look for a trade right here, and that would leave me with 3R, which unfortunately it wouldn't be a win by a little bit. But yeah, I didn't trade it. I'm just saying like this, reviewing my strategy. So this would have been a stop loss because we also don't put ourselves break even. And yeah, today nothing pretty much, right? Maybe this, but it's super risky because you have one sweep of Asia, then you have another, but then like you have these levels right here that are just hanging, and I'm not assuming they're gonna resist this because even this is already been mitigated on this level. So sorry, this level was mitigated by this already, right? So this should be the one holding, which maybe it did, maybe it didn't, but it's overall risky for me because what you want to be looking at is, for the higher quality setups, is the major liquidity is getting taken, and that could be previously highs, previously lows, and overall sessions as well. Because in here we have previously highs being swept. In here is a session one. In here it's Asia plus a huge drop, and the efficiency. You might look at this day and say, damn, that's a shitty day. And I might look at it and say, this is an amazing day. Because how can you trade liquidity and not like this, man? Yes, this is a whole range, but focus on the liquidity sweeps, brother. It's a whole range, but inside there's so much history, okay, in the candles that you only can observe if you go to M5, M3, M1. All right. So here you have like London going up. Okay, you might have had a short here because we're also sweeping some major liquidity around here, but I don't really like to trade London. And if I were to trade this, there was kind of a double sweep. There wasn't no trap. I didn't like how this came right here to retest it. I knew it would fail afterwards anyway, and you would have gotten like, depending if you go for the initial or for the initial stop loss, not the initial stop loss, the higher high, okay, the initial high of the structure, you get like a 2R or something. Or if you play the retest, or if you played something on limit, maybe you could have gotten the win. But that's besides the point. The beautiful thing here is New York and London close. All right. So in here you have what I call the market structure overall. Okay, the real one, because then you have packs going from one liquidity to another to another. Okay, not the usual. How I'm always telling y'all that it's nothing like this. It's more like this if we're on the trend. And even if we're not, it's some fucked up shit like this. Because it's very easy for me to tell you market moves like this with some lines drawn, but as soon as you jump in the markets, you see this stuff. Okay, so where's the trend? How do you trade this? Exactly. Okay, there's ways to trade it. You know, you don't necessarily need to be only with liquidity and lower time frame zones, but most beginners get lost because of this. And as soon as you start adopting liquidity, like a strategy like mine, you'll see huge success, and it's understandable. Okay, because now we're adding logic to price action. Okay, what I mean is, here we have a slight inducement. Okay, we take it. You look to buy, but even before we take it, okay, you can see how we come to it and we make some equal lows. We make some equal lows, and we even, you can see how we go higher. Okay, just to incentivize people to put their stop losses here, because we're going to break this London high, but just not yet. Okay, so this level becomes a trap. Or the whole area is a trap. Even if you trade SMC and you're trading this intermediate order block, this didn't do nothing, didn't take no liquidity, is not special, didn't do nothing significant. So why would you take it? So this is the first trap. And then again, because this was a trap, this would have become a trap, and this is the low of London. Okay, so New York will look to sweep the highs and lows of London session, the same way as London will look to sweep the highs and lows of Asia session. Okay, it's called the session's liquidity. There's not just Asia sweeps. Okay, London sweeping Asia, for example, the strategy that a lot of people like to trade nowadays. There isn't just that. There's also New York sweeping the highs and lows of London, and that's powerful because you can see how we sweep the London lows. Okay, this blue box, we go to the highs and then we go back down. That's liquidity going from one liquidity to another. All right, and then because this becomes too visible, everyone sees this sweep of liquidity here, see this as a breaker structure, whereas me and my students see that as a sweep of liquidity. We know that this will become a trap. And then later on, this will become a trap. It didn't actually came to take it out in Asia session. I don't know how, but it will be a liquidity for later, as it's now equal high, right? In here, it's just a matter of looking for some structure to place yourself. Okay, if I could zoom in, but what happened here? We're just basically price coming lower. Okay, sweeping the liquidity, going back lower again, and now you have some structure to place yourself, and you could have taken the trade like this. All right, because this swept liquidity, and then it gives you some structure here because there's nothing right here, okay, for you to place yourself besides this level. Okay, but that's you're gonna have a huge stop loss maybe, and then you can target the highs. And then the same thing, we go from one liquidity to another. We sweep liquidities to give us fuel to sweep other liquidities. It's not only sweeping your liquidities. Okay, there gotta be a target in your desired direction. So here it was this liquidity, it was the London high, and then as you sweep that, this becomes too visible. Then we can sweep it because also smart money traders will see run of equal low, this break structure, this is a nice placement. Okay, and then boom, they got taken. I didn't take none of these trades right here, but okay, listen, this one I took it in EU and got a win. So technically, I took this one because EU and GU move kind of the same. This one, this movement, should I say, I took it on EU. Okay, this line a close retracement. Okay, and it's crazy. You have two retracements here in London close, which is awesome. I took this on EU. I took this on EU as well. The problem is with EU, I got a break even because price went down, and then for some reason, maybe for tariffs or something, Asia come to sweep this, and then it actually went lower. And then this one, I wasn't paying attention, but I got a student that took this. Okay, you can see how it's the same chart, the traps, you identify them perfectly, and they got a win. of London close, because he understood what I teach about liquidity structure, and he understood the concept of the London close retracement. Okay? Because normally, the London close is the retracement of the day. If you have New York and London both going in one direction, sometimes you have London close as the opposite. Okay? Or you can have London close as the opposite of New York, if New York is different to London. In this case, we just have swept some liquidity, so you can expect London close to be a nice and easy retracement of the day, or a nice little move to the other liquidity. Thing is, this day things were moving quite well, so we got a sweep of liquidity, then made this sweep of liquidity, and then we even got another retracement right here on London close / Asia. All right, so hey, awesome day for people that was trading in GU and trade liquidity. This student is just been with me for 3 weeks. Sorry, for 3 weeks out of the 3 months. Okay, this is the structure I allow for my mentorship students. So you can see he's only on week 3. He's only on week 3, and he's already adopting the concepts that I teach. 4, 3, 2, 1. Come on, come on, come on, come on. Yeah, break that liquidity, motherfucker. UJ. Woo. Yeah, so news are just setup accelerators. If you read liquidity well, if you know where price is heading, like technicals and fundamentals will just follow. Woo! And this is unfunded, boys. Massive rocket, man. Absolutely love these. I mean, who wouldn't, but like, just confirms you're right. Hopefully it doesn't reverse from here. Because right now testing out this order block. Come on. But hey, he could do so. I just send out everything to my students right here. The pre-analysis, the second sweep to EU, the signal, and now even the break-even. Yeah, I saw the DXY as well looked a bit shit. But at the same time, it's in the middle of nowhere. Like in here, if we're going to look on the lower time frames, either the second sweep after London session, it swept a trend line here. Boom. And yeah, I see what you mean. It was this bullshit here, which but at the same time, we can still be bullish, just come a bit lower to make some efficiency here, or even swap this liquidity of Asia low, just on the lower time frames. Just as a little retracement. That's why I took it on you, and I'm not looking for the moon. I'm just looking for a 3R, which was super close to it. Super close, man. It's gonna be decisive now. If you respect this order block this week, this rejection, and go to the downside like it is now, or if it's gonna continue to go up. Hopefully it goes up, man. We got Asia, we got London, we got this trend line right here. But will it respect it until it goes to my stop loss, or will it disrespect it now? Hopefully it does now. It is a risky trade, but confident to the vision. I mean, not essentially that risky, but yeah. The zone isn't the best, but it's coming to efficiency. We swept. I mean, I would even consider this equal lows. And then we even swept London off today. We set a pretty low that was making equal lows with some level from Monday. Hopefully a nice TP. It seems like 99% sure, but hey, can't call it. You want a good advice, guys? Don't celebrate till the money is in the bank. That's kind of like for sales, but for trading aspects, don't celebrate until the trade has a TP. It can be a good addition. I'll definitely keep it as a pair. And this, boop, can we celebrate? Come on, guys. I know some of you that trade exactly like me saw it or even caught it, but boom. Come on. Come on, come on, come on. Wait, I'm gonna see if I can show you in here. Fuck. Can you see the fucking arrows? I'm sorry about the stability, guys. But maybe you can see. Maybe you can see. It's a fucking win, boys. My student taking the same shit. And he didn't even need the message. He didn't even need the call. He already knows this shit. This is an advanced one. He already completed like the 3 months of mentorship. He already knows how to trade. He saw the same shit. He didn't need my call. He's saying superb call, but he knew the levels. All right, I can choose a few of these. This guy has been on fire, collecting $300 here and there. Same with this one. Just crazy, bro. Shout out to Yasin. Shout out to Yasin. What a fucking machine. Let's see what it does. 2, 1. Come on, come on, come on, come on, come on, come on. It's going a bit down. It's going a bit down. But it still has the strength. Come on, come on, come on, come on, come on, come on, come on! Come on, that's what I'm talking about, man! Alright, let me chill out. Quick 600, quick 600. Let me show you because you haven't seen it, yeah? Alright, look. Look, can you tell? Can you tell? You can probably tell, but a little bit for the haters, you know. Right here, you see that? All right. Okay, so how did I knew? Right. Most importantly, I already told you. You gotta know where the liquidity lies, right? And this was a risky position. This not even because of the news itself, but because of the setup. And I'm gonna explain to you why in a sec. But I know the bias is overall bullish. You can see this as a clear trap. Like, what did this high do? It didn't take no liquidity apart from these inducements, these weekly highs, but it's nothing, right? It's nothing. It's nothing. It didn't come to mitigate this zone, if you were to look at it, right? If you were to mark inefficiency right here. So it didn't do nothing. It didn't take no liquidity. It made this massive drop, and people might be looking to short right here. Third fucking day in a row of profits, more than 10R across multiple trades. As you can see, EU for news, we already had some rejection around this level, and I was waiting for a second sweep into it, right? The strategy is waiting for liquidities. We have liquidity above, liquidity below. We wait for one to get sweep, and then we buy or short accordingly. But we need that liquidity to not only be swept, but wait for another liquidity sweep, a second sweep into it, meaning it will trap the smart money traders, right? Because they will see this rejection, they will see internal breaker structure, they will immediately long it at an order block on the lower time frames right here. And we wait for that to get swept. So it's basically like a 3-step. You wait for liquidity to get swept, you wait for an additional liquidity to be swept, meaning a smart money trap inside of it, and then you need some bias to be in your direction, meaning another liquidity target. We sweep on liquidity, and then you need that to give the fuel in order to reach your target, which would be another liquidity. Now, liquidities can be anything. It can be simple structure, every high and low, liquidity sessions, previous daily high, previous daily low, previous weekly high, previous monthly high, all of that stuff can be anything. The reason why I chose this one, and it's kind of internal, but we swept the Asia lows, right? So you all know that Asia sweep strategy where we sweep the highs, you look for shorts, you sweep the lows of Asia, you look for longs. Kind of like that, but as well, not every single person that uses it is profitable. You gotta be more wary of it, kind of like we do, waiting for a sweep of it, and then a smart money trap following that. And so we sweep it during the open of New York, and we come to an efficiency, right? Meaning this structure right here, the high of this structure right here, kind of like a higher time frame order block. If we increase the higher time frame, you'll see this block as an order block, all right? And also why we're looking for longs, because we have this structure right here. So the reason why I trade liquidity as well, and you can see this by the lines, perhaps you're telling yourself that markets are boring recently. In fact, the zones have been quite nice because we're going from one liquidity to another, to another, to another, to another, and right now to where? To another potentially. And then, because this is how market moves, sweeps one liquidity to sweep the other, right? And it won't go higher without sweeping something lower. Okay, so even if it's even if it sweeps the high, then it doesn't necessarily mean it needs to sweep this one, but it can sweep something like here, right? Always going from one liquidity to another. That's how I view the markets. And so with this vision is basically like the smart money traps, just on the high time frame for the zones, right? Trap, trap, trap. And the reason why I say that is because you have price sweeping something, doing a whole move, meaning a breaker structure here, and people will most likely be placing themselves here short with their stop losses just above this high. Because what? It took liquidity. Yeah, we're gonna probably go up there. For the XY, same exact thing. We sweep this high, we sweep this inducement. Coming to this, there's still an equal high above here, which on EU will equate to an equal low that there is on that chart. But because we sweep liquidity from above, I mean, we might go towards the downside liquidity. And we also have a high time frame liquidity below that. So there is a chance of the XY going down from here. And if the XY goes down, then EU goes up. And just look at this absolute rocket of a trade, right? Basically the same thing, because this was a trap. This will become a trap. And then with the same vision, I'm also expecting this to become a trap just because it's too simple and probably can't even do a ping pong from here. Maybe because it's more risky, as well as I know there's a major liquidity around here, right? But you can either take it to smaller time frames, right? Because this was a trap, this would have become a trap, and it was, right? I'm already break even on this, so let's see on Monday if I can get a win out of this position. And as you can see, we have the double sweep right here, right? I want you to be expecting a double sweep on M5 at least, right? You got the candles giving a reaction and sweeping it again on a moment of news, right? Because there was news at 2:30, and then I just position myself on the breaker structure of this, okay? Because normally you can have two types of smart money traps on the lower time frames. I mean, once we sweep the liquidity. So once we sweep the liquidity, you might have something like this. The last structure that broke the liquidity, price moving higher, and then people might position themselves here and they get trapped, right? They get trapped around this level. Boom, smart money trap, and then you have the correct breaker structure where you can position yourself. But there's another type of smart money trap that I also consider, which can be simply by the candles, right? You can have a beautiful candle rejection that just makes a long wick, and then people might be immediately buying or shorting from that level. So what I expect is the next candle or the next few candles, right, to just do another sweep to it. And one thing I found because of that as well is if you go to M15, you should be able to always see M15 candle sweeping the liquidity and the next M15 candle sweeping below or above that same liquidity sweep, right? So in here you kind of had this one sweep and then like second one, right? In here, perfect case of that, one, and then there was another one in between, but then two. I can even go to just the 26th, just a few days ago, and I can find exactly the same examples, like one sweep of liquidity, then it goes down, then it goes back up, right? That's a smart money trap for you. All right, congratulations for watching the whole thing. Hopefully you don't have a TikTok mind and just slept throughout most of it, but right now that you watch all of that, you're pretty much knowledgeable about smart money traps and ready to go on the live markets to start seeing and executing trades based off of it. But I'm gonna be honest, guys, even with this huge amount of value that I just gave you, this is still not enough to become a consistently profitable trader. At the back end, we all know that psychology is the most important thing. So in order to become a profitable trader, you need to have a real proven edge, which hopefully you got it from this video, and you need to reframe a whole mindset because of the psychology factor. And so maybe before you decide to start working with me, you'd perhaps want to check the description to see a whole other course that's full on psychology, over an hour long, I believe, which you'll of course get a lot of value as well. If you want to speed up the whole process from getting the full strategy on paper to specific advices to your psychology. You can work on a one-to-one basis with me. Just check the link in the description. Every single person that has worked with me has become a profitable trader at the end of the mentorship. So I can guarantee you that if you're serious, we take traders from zero to funded in just 3 months. And if that doesn't happen, then I'll send you $1,000 in your way. I am that sure of that, so don't hesitate in booking a call in the description. Find out if you're a good fit for the mentorship and make sure to leave your feedback in the comments. Alright guys, it's been a pleasure and I wish you a good day.